NBC Plus.
A new report by UBS says 379,000 more people became millionaires last year in the United States. There are now almost 24 million millionaires in the country, and that's by far the most in the world. Mainland China, interestingly, was second with 6.3 million. Now, is that yuan? You have to have a million yuan? No, probably dollars. Should be dollars, otherwise it doesn't really count. Of course, I was kidding. You can read more about the report in Robert Frank's Inside Wealth newsletter. Go to cnbc.com/insidewealth, and I challenge you.
Yeah, challenge me.
To say something negative about that. Don't look for it.
It's a positive morning. It's a Friday.
It is.
In the summer.
We could interview Bernie. I guarantee you he's pissed off about this. Guarantee.
I guarantee you're right. Meantime, we had a market flash for you. Reuters saying that Stellantis considering the possible sale of its struggling Maserati brand. You want to go buy this together, Joe? I think a Maserati, we like Maserati. I mean, it's struggling, but I like a Maserati.
I'm not a fan ever since they've got that starter Maserati, and people say I have a Maserati. I really don't think they do. Like that.
Like that one.
I do not. Yes.
That's too.
That's what.
Too lowbrow.
That's what. Yes. Okay. I'd rather have my car. I'd rather.
The report says,
John Hamm drove one of those on that Friends and Neighbors thing, and I was not impressed.
I think
Ferrari, on the other hand, even a starter, I would.
You'd go for it.
Yeah.
The report says that McKinsey conducting an assessment for the luxury brand, and that it is still though in the early stages. So don't send your bid in just yet. Maybe they'll hold on for a little bit longer. Maybe we could just ixnay that starter model and then try to upscale the whole thing, go super luxury.
I don't think any of these are really street things that you just drive around. Well, they're definitely not street legal, but like a Lamborghini. Who has a Lamborghini driving around New Jersey? And why? And where can you?
Good question.
People do.
They do. On TikTok.
They do.
Coming up, more on today's top stories, including the latest on Microsoft's drama. And boy, is there a lot of it. What a soap opera this is. OpenAI's partner, Microsoft, OpenAI. What is going on between these two lovebirds? Maybe not even loving each other anymore. Stay tuned. Spotlight come right back.
Buzz.com.
Welcome back to Squawk Box. 5 things to know ahead of today's opening bell. Let's tell you what's going on here. President Trump saying he's going to decide within the next 2 weeks whether the U.S. will get involved in the Middle East conflict. Iran's foreign minister is set to meet the foreign ministers of Britain, France, and Germany. That's going to happen in Switzerland today. Meantime, SoftBank looking to partner with Taiwan Semiconductor to construct a $1 trillion industrial complex. That's in Arizona. And they're going to be trying to build robots and artificial intelligence there. That's according to a Bloomberg report. Meantime, Microsoft considering halting negotiations with OpenAI about the future of their partnership. That's if the two sides can agree on some key issues like the size of Microsoft's future stake in OpenAI, and that's from the Financial Times. Meantime, a report saying Microsoft now planning to cut several thousand jobs. That's just going to be in the next several weeks in sales and some other teams. And a SpaceX Starship rocket exploded at the Starbase facility in Texas. That happened on Wednesday during a routine testing in preparation for a launch. On social media, SpaceX described it as a major anomaly and said all personnel are safe and accounted for. Elon Musk also responding on his platform X, writing, quote, just a scratch.
Just a scratch. That's funny. Well, not funny, but when you look at that. Coming up, former Fed Vice Chair Roger Ferguson is going to join us on the central bank's latest forecast and its decision to hold steady on interest rates. Stay tuned. You're watching Squawk Box on CNBC. That's the futures this morning down about 63 points. Nothing that significant. Initially, after the close Wednesday, I don't think necessarily the futures were going to be weak, but you put a whole day in there where things don't trade. And yesterday, I think the futures started going down a little based just on all the worry about the weekend and everything else. And we're being buffeted by geopolitical events. There's no doubt. Even the Fed seemed less important, but then you had the president again totally laying into to Jay Powell. U.S. Treasuries right now, though, well behaved with the 10-year at 4.41. On Wednesday, the Fed, as you know, left rates unchanged as widely expected, continued to pencil in 2 rate cuts by the end of the year, while also hinting at concerns about stagflation. For more, let's bring in Roger Ferguson, former Fed vice chair as well as a CNBC contributor. And when we're on hold and we have you on, Roger, we've always got a lot to talk about, but sometimes it seems like we're talking about the same thing over and over again, and you kind of, you tell us just relax and probably not the right time to cut. I'll tell you what hit me today, and that was this headline. Fed waits for the dust to settle on tariffs before a rate shift. Now, I think what that is implying is that they need to know what the inflationary aspects of tariffs are before they cut. What I'm saying is, if we're waiting for the dust to settle on tariffs, it could also be a growth concern about tariffs. I mean, that's what I'd be waiting to see the dust settle on. How much uncertainty have this tariffs caused? How much with consumers and CEOs? So for me, I'd be more worried about that and missing the opportunity to cut. Is there any way the next move is a hike? No, it's not going to be a hike. Is it? In any world, is it going to be a hike? So we're really just deciding on when to cut. And if you're waiting for the dust to settle, I'd be cutting before watching the labor market or the economy weaken. I convinced you?
Well, Joe, first, I'm not convinced. Good morning. I find your analysis interesting, but as you say, I'm not convinced. And look, the Fed's not convinced. So while you say that 10 of them penciled in 2 rate cuts this year, what was very interesting to me was the number that penciled in no rate cuts this year. 7, and then 2 said maybe 1. So I think this is a Fed that's evenly divided, and I'm not at all sure that even when the dust settles, they're going to feel very comfortable about taking one move or the other. And you pointed out exactly why. They are looking at something that feels like a mild version of stagflation. And with inflation not coming down quickly enough, I think their hand is going to be held for quite a while before they even seriously start contemplating rate cuts. So I appreciate your analysis. I don't think it's the one that's shared mostly by the policymakers.
Don't you think that that's dependent on the assumption that these upcoming data are going to show a tariff effect on inflation? Everybody's telling me, this is, Leisman, everybody, this is the time. Okay, we're finally this is going to be the one where the inflation numbers are going to be hot. How do we know that this isn't the one where the labor market is, with claims and other things, it seems more likely that we could see weakness rather than inflation?
Oh, well, look, the odds of so-called stagflation, I think, have gone up. I don't think that the challenge for the Fed is, while we might see slowing growth, slight rise in unemployment. I reported a little while ago a CEO confidence index that really swung to negative territory. They're also penciling in an increase in inflation. So for a central bank that's got a dual mandate, it's sort of stand pat time. And I believe that if they want to maintain the inflation fighting credibility, before they focus on the weakening economy, they need to focus on and be clear that they're not going to let inflation get out of hand. And so given the history they've had over the last several years, I really don't think they're going to pivot to rapidly cutting rates unless they're 100% certain or much more confident that inflation is not going to be their major problem. So I still think, on hold for much of this year.
It would just be if you got burned on being too easy for too long. It would be bad if that, if your reaction to that was, okay, I was too easy, no matter what, we're not going to be easy again. And when In one case you shouldn't have been, and in the other case it was a time that actually called for that.
Look, so I agree with your general thoughts that two wrongs don't make a right, so to speak. I think where you and I are disagreeing is the combination of inflation rising, and they're now predicting core inflation with a 3 handle this year, and I think 2.8 next year, something like that, 2.7. That's not moving in the right direction. And I think the most important thing for a central bank is to maintain inflation credibility. So I think where you and I are disagreeing is in the face of stagflation, with inflation high and the economy slowing, which thing do you look at first? And I guess my view is look at inflation first, and maybe I'm sort of surmising that your view is we'll look at weakening growth first. But either way, it's a bit of a dilemma for them, and therefore, on hold, wait and see is going to be the mantra for the next several times. I think.
What do you think Chris Waller is going to say today when we talk to him? I think he's going to. I think we're going to have a bromance.
Look, Chris Waller is really very capable, as you know. I think what he's probably going to say is he expects any inflationary impact of tariffs to be, short-lived. I hate to use the word, but transitory. That's what he said the last time around. He is very well respected, among economists, among policymakers. But I also think that is not necessarily the consensus view, that most policymakers are not 100% convinced that any inflationary impulse from tariffs will be temporary. Right. The other thing, by the way, while we're focused on tariffs, there's also some concern about the quality of the labor market, and with action against immigration, what is that going to do for, in some industries, labor supply? And the final thing the Fed's talked about quite a bit that I'm sure Chris is focused on is so-called inflation expectations, not just long-term but short-term. So there's a lot that's weighing on them. I think that's putting them in this wait-and-see position.
All right. I tell you, when President Trump talks about it, and I don't like the pejoratives and the disparaging necessarily of Jay Powell. But when you look at the rest of the world and what borrowing costs are, and when he puts it in terms of if we were a point lower and I could lock in long-term rates that all these things are rolling over, and if I could lock them in a point lower, this is the amount of money we're talking about. It's like wow, it would be good. But then again, you don't want to let the inflation out of the bottle when it's contained. You don't want to do that. But in a perfect world, you'd always like, as a issuer of debt, you'd always like, lower interest rates. So I mean, I get what he's saying.
Oh, there's right? I get what he's saying too. I agree with you. I don't think the pejorative nature of the comments is helpful or appropriate. But I also get what he's saying, as you are, that we are a borrowing nation, therefore lower rates would be approved or helpful. But I do think the president also knows that he was elected in part because of inflation concerns and inflation experience that people have had. Right. And as a wise leader, he would certainly say he does not want to see, as you were saying, the inflation bottle, the inflation genie out of the bottle again. So, I think the president, if he were really focused on all sides of what drives this economy, might be a little bit more neutral as well.
I was going to play some of your comments for Chris Waller, but I'm worried he might roll his eye. I'm not going to do that. I'm not going to do that, Roger. But I might bring it up. No, he won't.
Feel free to do it. Chris is a very wise fellow and a friend.
I'll bet you he's just as nice with his comments about you as you were about him, and that's the way it should be. Anyway, as always, good to see you. Thanks, Roger.
Coming up, details on the sale of majority stake in the NBA's Los Angeles Lakers. It's now got the richest valuation of any U.S. pro sports team ever, as my children like to say, EVAH, ever. We'll come right back.
The Bus family is selling its majority ownership of the Los Angeles Lakers to LA Dodgers owner Mark Walter for a franchise valuation of about $10 billion. It'd be the highest price ever for a U.S. professional sports team. Walter is CEO of TWG Global and financial services giant Guggenheim Partners. He was part of a group that bought 27% of the Lakers in 2021. And reports say that the Bus family will still own at least 15% of the team for a period of time. On X, Lakers star Luka Doncic said that the Lakers are an amazing organization, and I'm looking forward to meeting Mark and excited about the future.
It's big. It's big.
A lot of money.
You know, and I remember when Walter first went after Dodgers,
Right.
everyone thought
Because
that
he was
crazy.
using company money to buy it.
And people thought the whole thing was insane.
I know.
And look, it's worked.
Yeah.
It's worked in a big, big way.
Nice World Series. Seventh game coming.
Pretty good.
People said this wouldn't be great. It's pretty good.
Pretty good.
Because of the stars. Those stars from that side. Last night, see
I
last night?
had not, unfortunately, been watching.
Pacers.
Trap them.
Pacers. Forcing a game, so I think it's Sunday. Thank you for that at 8 o'clock.
Coming up,
Yes.
an interview you
I
do
can't
not
watch it.
It's too late. An interview you don't want to miss with the economy minister of Israel. Don't go anywhere. You're watching Squawk Box, and this is CNBC.
Ho Americas.
Right. It's just before 7, about 6:58 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Andrew Ross Sorkin, who came back on a Friday. It's an interesting move, is it not?
Well, there was a holiday yesterday,
There was, I know.
so I came back yesterday.
By the way, I've decided,
Before.
Becky's off, but I've decided if we do ever do a 4-day work week, I want to do Thursday. I don't want to do,
Really?
yeah, you do 3 days, then Wednesday you can stay up, you know, you get Thursday off, and then what do you got left? After
1 day.
Thursday? Got 1 day.
What about just doing it on Wednesday? That way you go 2 and 2.
I don't know. Let me think about that. Among today's top stories, President Trump says he's going to decide within the next 2 weeks whether the U.S. will get involved in the conflict between Israel and Iran. Meanwhile, Iran's foreign minister says that the country won't agree to the de-escalation talks while under attack by Israel. President Trump giving TikTok another reprieve in the U.S. He signed an executive order that extends by 90 days the deadline for his administration to try to bring the app under American ownership. It's the third time the president has pushed the deadline. And China's exports of rare earth magnets declined last month, falling 74% from a year ago. Exports to the U.S. were down 93%. I was, just before, we've got a great interview coming up, but just before this, did you think this?
What's on there?
Yeah, we're gonna have too many U.S. at risk. We're gonna have a glut of EV batteries.
EV batteries, yes.
We've got all these
Sorry,
places
I saw
making-
digitally that story.
What's that?
I saw that story digitally.
You did? I can't do that yet.
You're
I
still
don't-
on the physical paper.
I don't know how to. Can you? I just no. I just.
So when you pointed that on the
Yeah.
paper, I was like,
But I saw that. I'm like, you gotta be kidding me. And it's because so many unneeded. They're gonna. Just that's the way things work, right? Boom bust. It's the way the
Boom
world.
bust.
Yeah.
boom, bust, repeat. Right now, we're going to talk more about our main and top story of the morning. President Trump saying he's going to decide soon on whether to join Israel's campaign against Iran. The two countries trading attacks again today. Yesterday, Israel's main hospital in the southern part of the country was hit with an Iranian missile. Tel Aviv also hit by missiles, with one falling very, very close to the Tel Aviv Stock Exchange, partially owned, we should mention, by hedge fund manager Bill Ackman. Nir Barkat is Israel's Minister of the Economy and Industry and is with us this morning live from Israel. Good morning to you, sir. We appreciate you joining us so very much. Just speak to us, if you could, about sort of how you see this military escalation taking place. What happens over the next 2 weeks, and what do you think Israel does, almost irrespective of what the U.S. does?
Well, first of all, thank you for having me. We have a very clear objective. Iran, the jihadi leadership of Iran, for decades, have built themselves to eliminate Israel off the map. They have focusing on creating nukes. They have a significant amount of ballistic missiles, and they built a proxy strategy around Israel. They funded and trained Hamas, Hezbollah, and regional cells, jihadi cells, that are focusing on terrorizing the state of Israel. And so what Prime Minister Netanyahu has done, he's been really, really focused on eliminating those proxies. And now we're focusing on making sure that Iran will never have the capabilities of nukes and will never have those capabilities of ballistic missiles to target Israel. Any country in the world understands what we're doing right now. And I think that the Iranian regime now understands that it's not worthwhile messing with Israel.
Minister, the question is, the U.S. has these bunker-busting bombs, and there's a question whether the bunker-busting bombs work. It is at all to begin with, but it's also clear that Israel doesn't have, I don't think, that kind of weaponry. And so if the U.S. doesn't come in behind Israel, what happens?
Well, I think we've demonstrated the creativity of the warfare Israel knows and is capable of doing. You saw the beepers in Lebanon crunching Hezbollah. You saw the first phase of the war, eliminating leaders of Iran, at least their army. And you saw that one stage after the other, we know how to get our things done. We've done our homework, and we're not going to stop. We're not going to stop. We're going to do this ourselves if needed, and if others join us, more than welcome, because we're not just fighting Israel's war. I want to share with you that this morning we saw pictures from Iran burning the Israeli flag and the U.S. flag. We in Israel are considered the little Satan, and the big Satan is the United States. We're all aligned here. We have the same goals fighting jihadists that want to kill us.
So when the president says that he needs 2 weeks to decide what to do and to maybe sort of pursue some kind of diplomatic resolution to this, what's your position? Does that
We
help
understand
you?
the end game. Well, eventually, we will not stop this war until we are sure they do not have those capabilities. Because if they have those capabilities, they demonstrated that they will use them. If the proxies work, they used them in October 7. We cannot allow that again. They used hundreds of ballistic missiles targeting at Israel, and unfortunately we saw where also Israeli citizens have been, innocent civilians have been killed. You saw the attack on the hospital today. And we want to make sure that they never have nukes. We believe them, that they mean to use those nukes to eliminate Israel. We will not let that happen. So regardless if the U.S. joins us, and we will of course be very happy to, but that's President Trump's decision to make, we are committed to the same, to the goal eventually. We have no choice but to make sure they don't have those capabilities.
Minister Barkat, does it even make any sense to talk about what the possibilities are for Israel to deal with Fordo if the United States declines to do that? You were a paratrooper.
Yeah.
What would that look like? Would special forces? Special forces be dropped nearby? I'm sorry.
Hopefully you agree with me that we don't want to let them know our plans. I don't think it's prudent to discuss the plans of how we take them out with you folks, because they also listen to CNBC. We don't want to give them that information.
But you're confident that if you'll do it on your own if you have to, and it's not going to be finished until Fordo is. I mean, probably everything. They say they've moved. I don't believe them. They say they've moved a lot of stuff out of Fordo. That's the. I mean, that's got to be taken care of to call this a mission accomplished.
We will accomplish all the goals of the war with Iran. We will accomplish all the goals in Gaza. We want our 53 hostages that are still in the tunnels, in the dungeons of Gaza. We want to make sure that Hamas will never exist after this war. They have to completely surrender, put down their weapon. And that day, by the way, the day that they return our hostages and put down their weapon, the war in Gaza will stop. And so we're committed, Israel's committed, to make sure that we'll never go back to October 6th. We will make sure that Iran does not have those capabilities to attack Israel or the moderate Arab states in the region. They're also really concerned about the power that Iran had. We want to make sure they don't have those capabilities.
Minister, does that effectively mean toppling the regime? Meaning, there's sort of two component parts here. There's removing the nuclear capability of this country, and then there's who's running this country and what comes next.
Yeah, that's a decision of the people of Iran. I mean, if they do, we certainly won't shed a tear. And if we can chip in a bit of help, that we will do that. But that's not the goal. That's not the primary goal of our operations in Iran. We will settle for making sure they don't have those capabilities. We'd be happy if indeed something like this will happen. And I want to share with you that as Minister of Economy, I see a huge spike of economic growth for Israel. The region in the Middle East is looking for us to complete the work. I'm sure that the Abraham Accords that President Trump really pushed forward can expand to include the Saudis, Indonesia, Azerbaijan, and we'll probably also find new solutions, different solutions with some of the leaders, local leaders in Israel to join the Abraham Accords in Judea and Samaria. And I'm very optimistic. I understand that the more you become bad with the bad guys, the better we become with the good guys. And the new alliances that will happen at the end of this war, I'm sure we're going to get significant prosperity, not just in our region. The world will be much better, much safer without Iran being such a bully as they were and still are, and we'll make sure they don't.
Mr. Barkat, if President Trump is watching and he sees that Israel is going to handle this one way or another, doesn't that sort of induce him maybe to stay out and say they're going to handle this? I mean, there is risk to the United States getting involved, and there's a lot of discussion on both sides over here. about whether to do that. I mean, if you can handle it, I'm sure he'd prefer that you would handle it. I think the loss of life would probably be worse and extended, and all the fighting would go on much longer, obviously. So that might be something to consider. But
Well, if I could
I mean, do you
speak on
need
behalf
the
of
United
all-
States help? You need the United States help or not?
First of all, I could certainly say on behalf of all of Israelis and my prime minister and the whole government, we're very thankful, extremely thankful to President Trump and the United States. We use a lot of your weaponry, we get supply, we get your sort of an umbrella protecting Israel in the United Nations, and we do not take this for granted. Certainly be happy if the U.S. joins, and it certainly could shorten the time frame of this war. And I think that if I could say it's in Israel's best interest, but that's not the point. The point is, I'm sure that President Trump will act upon the American interests first, and we respect that. And if he decides to go on, we'd be happy and we're thankful anyway.
What if there's another Iran deal? God help us. Another Iran deal for monitoring, enrichment, blah, blah, all the things that we know. Iran probably didn't comply with it in the past, but there are negotiations going on. If there were to be a negotiated settlement, would you honor that, or are you still going to take care of your business there with Fordo?
Well, if you have to chew, don't talk. Enough talking. We don't trust them. They're unfortunately a regime that is sending their children to commit suicide. They train to kill. And they have no problem lying and trying to smear the time. We understand that. It's not going to work. End of story. We're not going to stop this until we make sure that there's no nukes and there's no missiles aiming at Israel. Enough talk.
Minister, interestingly, the Tel Aviv stock market, which we just acknowledged at the top of this interview, had bombs literally landing next to it, yet it has been on a huge run. What do you make of that?
Well, I think the world understands that Israel is going to win this war and is winning this war, and the opportunities are huge, and that's why people are investing in our stock exchange. And I have to share with you, as Minister of Economy, I speak to many of my peers around the world. They want our experience. Look at the security side. Everyone around the world, our friends around the world are saying, hey, whatever you use to secure Israel, we want, because it's being tested. Fighting terror, combating terror. Our friends around the world are saying, share with us how to combat terror. And then that innovation also includes classic high-tech, agro-tech, food tech, desert tech, climate change, advanced industries. So the people understand that we're very innovative. And after a war, you see a huge spike of growth. So people are expecting that. And I see the huge opportunity, and we're preparing our infrastructure for economic growth. And that's why you see it in the stock exchange.
And then finally, Minister, just a personal question. How do you feel about your own safety and those who are in places like Tel Aviv and other parts of Israel as we read reports and hear about bombs raining down, and how many more bombs and other kind of missiles do you think Iran has and is able to position towards Israel?
Well, I'm happy you asked that question. We're all, the majority of us have served in the army, and we manage risk, and we all understand that we have no choice. There's only one Jewish state. That's our secret. And in all wars, you see the war in Ukraine, 4 million Ukrainians left Ukraine. And everywhere there's a conflict, you see people leave the region. With Israel, 100,000 people came back to fight. And you see right now, there's a huge line of Israelis that want to come back, and they want to take part of the war. And so it's a question that Israelis answer very quickly. What do you mean? We have no choice. Of course we're here, and we're dealing with our security. We have really good bunker to protect ourselves. We have good army, and we have good defense, but also now we've demonstrated that we have really good offense. So all in all, we're telling the region, telling the world, don't mess around with Israel. We know how to deal with our challenges. Focus on peace with us, expand the Abraham Accord, but if you come to fight with us, you're going to lose your war.
Minister, I want to thank you so very much for joining us this morning, and we do hope you stay safe, and we do hope you come on back and keep us apprised of your progress.
Thank you very much. Thank you.
Thank you. You bet. Meantime, I want to get straight over to Frank Holland. He's got a look at this morning's pre-market movers. Frank, nice to see you.
Good morning, Andrew. It's been a while. Good to see you as well. All right, I'm going to get to some earnings movers first. Let's start with Accenture. You can see shares are pulling back nearly 4% despite beating on the top and the bottom line. Also raising its revenue and earnings guidance for the full year, essentially forecasting a stronger Q4, which is the current quarter. The company also said it recorded $1.5 billion in GenAI bookings for the quarter. Also reported its biggest growth in its financial services segment at 13% year over year. But again, you can see shares are pulling back just about 4% right now. For much more in this quarter, be sure to tune in to Squawk on the Street at 10:20 Eastern for an interview with Accenture CEO Julie Sweet. We've got another earnings mover this morning. CarMax also reporting. You can see here, shares are popping. They're popping big time, up nearly 9% after beats on EPS and also on revenue. Gross profit increased double digits year over year. Retail used car sales increased by 9%. Important distinction, retail used car sales increased by 9%. Also, same-store sales increased by 8%. CarMax also said it opened 2 new locations in the Dallas and Phoenix metro areas. Again, shares almost up 9%. You can see a big pop after earnings were released, actually pulling back a bit from those levels, but right now coming back to about up nearly 9%. Also looking at Tesla shares this morning. They're higher this morning, up 1 1/3%. A lot of enthusiasm over that robotaxi launch in Austin on Sunday. Dan Ives with a note coming out saying, in part, that the $1 trillion autonomous era begins. Ives goes on to forecast that the robotaxi will launch in 25 U.S. cities this year. He reiterates his outperform rating and his $500 price target, implying about a 50% increase from where shares are trading right now over the next 12 months. He also goes on to say he believes that Tesla could reach a $2 trillion market cap by the end of 2026. Again, shares of Tesla, they're up about 1 1/3%. And by the way, I know you guys are talking about the Lakers later in the show. Pacers in 7. I'm just calling it. Pacers.
Okay. We will see, Frank. We will see Sunday, 8 p.m.
Yeah.
We'll figure out.
Good to see you and Joe. Good to see you guys back together.
Unfortunately, we won't see.
I know, it's past your bedtime. It's past my bedtime.
Yeah.
Well, not 8 p.m. The first hour was what?
Great.
Great.
Coming up, finding value in the market right now. Bill Nygren of Oakmark Funds will tell us about some opportunities that he's seeing. And then in the next half hour, he commanded the U.S. forces in Afghanistan, retired 4-star Army General Stanley McChrystal. Going to give us his view on the Israel-Iran conflict. Squawk Box. Be right back.
now.
Welcome back to Squawk Box. Let's check the futures right now. Not a lot happening. A little bit of red across the board. Join us now with more on the markets. Bill Nygren, Oakmark Funds portfolio manager. Sorry, I'm a creature of habit. I cannot intro you without mentioning that you were talking to Mark Haynes when the first plane hit, and
That's right. I was in the studio in Chicago talking about cable TV stocks or something like
and I
that.
said, how long did they say, just we'll be back to you, hold on. It was
about half an hour.
a half an hour. He said, wait, we might come back to you. And then it wasn't a half hour, it was about 3 years when it was all said and done. Just in hindsight, what did you tell, because you're usually long, you're usually fully invested. What did you tell investors back then? Did you remember, were you happy with the advice that you were giving us? We recovered fairly quickly, did we not? How long did it take?
Yeah, it didn't take that long. Since Oakmark started in 1991, our advice is always think about what a company might be worth 7 years from now and try and buy it at a very significant discount to that today. And the events that you think about that have happened since 1991 that investors have gotten worried about and wondered, like, is this the time to be out of the market? They've all paled in comparison to the economic growth we've seen over those next 7 years.
And that included September 11th and a pandemic.
Yeah, we started Oakmark in 91.
What's after that? The end of the world is the only thing after that, isn't it? And that, like Markesh said, the trades won't settle anyway. So,
but if you put $10,000 into the S&P when we started Oakmark, you have about $250,000 today.
What about maybe tariffs? Maybe from what I see, a lot of people in mainstream media say the tariffs are worse than the pandemic and September 11th.
Something we've always said is that economic forces are stronger and longer lasting than political forces. And the reasons are that there's so many checks and balances. It's really difficult to have stupid policy in place for a very long time.
That's amazing, isn't it? And those guys thought that up like a couple hundred years ago on how to structure things.
What's so fascinating, we're talking about the Israeli stock market right now. You have missiles landing literally next to the exchange and it's up.
Think about who was on last week? It wasn't last week, it was on earlier this week. The picture of the Middle East and the world, if you take out this pain in the ass that we've had since 1979, and suddenly the Abraham quotes, that people start talking to Israel, suddenly I don't know, maybe that's idyllic and it never really happens, but you could make a case that this could be very positive for the world if that
all works out.
Yeah, exactly. And you think you're not a geopolitical.
It's not something we spend a lot of time
How
thinking
about
about.
tariffs you thought about? You didn't?
Well, sure, we thought about tariffs and we tried to make an estimate of how much business values would change 7 years from now based on tariffs.
Yeah.
Our conclusion was they would probably modestly hurt the intermediate term cash flows. But the stock market reaction, if you remember, like Liberation Day, we had like 3 down 5% days in a row. And we had a very hard time estimating that the average company had lost 15% of its value. So to us, it was an even better opportunity to invest.
You point out, I think rightly so, that the 22 times earnings for the S&P, that's only a few stocks gets it there. Most of the stocks are not at 22 times.
Yeah, the spread in the market today is unbelievably wide. If you take the top 100 PEs in the S&P 500, it's a little over 40 times, but the bottom 100 are at about 12 times or under. And what we do at Oakmark is try to identify the companies that are out of favor, selling at a
And you got a
significant
couple of
discount to value.
examples. First Citizens and Airbnb.
Yeah, most of our portfolio is more traditional value stocks, the single-digit PE companies like Citigroup and General Motors. But we also try to invest at what I would call the intersection of growth and value. There are a lot of investors that think of growth and value as opposites. And we think value is the opposite of expensive and growth is the opposite of no growth. Usually high growth companies bring high prices, but sometimes they don't. A company like First Citizens, and they're about the 15th largest bank in the US. They were the ones who bought Silicon Valley Bank from the FDIC. Over the past 5 years, they've more than tripled earnings, more than tripled book value, and the stock sells at less than 10 times estimated 10 times estimated earnings for next year, and under adjusted book value for the end of next year. And you look at something like Airbnb, and GAAP accounting makes them take all of their long-term investment spending right through the income statement. It looks like the stock's selling at 30 to 40 times earnings today, but if they had the same take rate that Booking.com has, and we think Airbnb probably has more leverage with their providers, it would sell at a below market multiple.
Okay, great.
They're also spending a lot of money trying to get experiences, so their R&D expense is very high. If they brought that down to an industry average level, it would be below a market multiple, and it's a great growth business.
Great. It was Steve Eisman.
Right.
I mean, he's worried about near-term tariffs, near-term conflict, but things work out. Anyway, go ahead. Thanks.
Nice to see you.
Nothing happened. Nothing happened.
Nothing happened.
Yeah.
Coming up, CNBC investigating whether big tech should get multi-million-dollar tax breaks for their data centers and how those deals are impacting state economies. We're going to dive into all of that when Squawk Box returns. The mad rush to build data centers is sparking a massive boom in tax breaks, and this is because legislators across the country doling out billions in sales tax exemptions to try to attract some very big tech companies. While there's no question the tax incentives are luring those businesses, there's a big debate over whether it's a fair trade. Pippa Stevens is here with more. Is it a fair trade? Who's winning, who's losing?
Well, Andrew, so we found that in just the past 5 years, 16 states have handed over almost $6 billion in data center tax breaks, arguing the incentives create jobs and spark economic growth. But not everyone is convinced. Here's the story.
Should states hand multi-billion-dollar tax breaks to the largest tech companies in America?
They attract investments that wouldn't otherwise have come there.
The answer depends on who you ask.
Does big tech deserve these subsidies?
I don't think they do.
Here's how it works. A big tech company agrees to build a data center in a specific state, promising economic growth, jobs, and revenue. In exchange, that state says it will not charge sales tax on equipment like computers, wires, and air conditioning units. A CNBC analysis found 42 states give a full or partial sales tax exemption to data centers or have no state sales tax. And only 16 of the 37 states with data center tax breaks have reported or estimated the total amount they've granted. Only Illinois, Missouri, Nevada, and Washington break down the data by recipient. For instance, CNBC found that one Microsoft data center in Illinois received more than $38 million in tax breaks, but created just 20 permanent jobs. Microsoft declined to comment on the project. Greg Leroy, the executive director of Good Jobs First, a research group on economic development, says the tax breaks benefit big tech's shareholders.
The truth is, these are warehouses full of computers, right? Using a lot of land, sucking up a lot of electricity, generating very few permanent jobs.
That's not how Steve Del Bianco sees it. He's lobbied for data center tax breaks on behalf of big tech.
Many of these big tech companies are worth more than $1 trillion. Why are they being offered these generous subsidies?
It's going to generate tremendous income during construction. It builds an entire ecosystem of contractors that know how to build and maintain and operate data centers.
Virginia is often called the data center capital of the world. Took a closer look at the data center sales exemption, finding it provided a, quote, moderate economic benefit. That said, the state only recoups about 48 cents for every dollar it forgoes in sales tax. Additionally, while data centers create thousands of jobs, most are temporary construction positions, not permanent. Of the big tech companies we contacted, Microsoft, Google, Meta, and Amazon said they follow all disclosure requirements on incentives and work with the local community around their data centers. Apple, Oracle, and OpenAI did not respond to repeated requests for comment. For more, go to cnbc.com/data center tax breaks. Guys?
This has been like ongoing debate about so many industries, and other industries receive sales tax exemptions. It's not like the first time this has ever happened. So the question is whether data centers should somehow be considered differently.
Yeah, so this is definitely not a novel policy, and it's something states have used forever to compete.
Right.
There are many industries, but I think the issue here is that data centers are a little bit different, particularly when you look at that jobs creation profile. So a Virginia audit found that a 250,000 square foot data center might have just 50 permanent jobs, half of which are contractors. And so that's well below a comparable like auto plant or a distribution center. And then there's also concerns about the strain they put on local infrastructure, particularly energy. Of course, they use a whole lot of power, and so the concern here is that it will then raise power prices for consumers.
But thank you. Appreciate it.
Coming up, Mark Zuckerberg's AI hiring and spending spree, a big investment in scale AI. Now there's news he's going after another AI company as well as its CEO. That story is next. Squawk Box coming right back.
Moving to beef up its AI capabilities, CNBC now learning the social media giant tried to acquire AI startup Safe Superintelligence earlier this year. That startup had been launched by OpenAI co-founder Ilya Sutskever, which currently now has a valuation of $32 billion. This is the guy who left OpenAI, if you remember, was somebody who was trying to push Sam Altman out. He had been recruited into this world by Elon Musk, originally into OpenAI, but we should mention that when Mark Zuckerberg was rebuffed, he recruited the company's co-founder and CEO Daniel Gross. That's according to sources with knowledge of the matter. Zuckerberg just hired a Scale AI founder, Alexander Wang, last week. We've had him on the program before, part of a $14 billion investment in that startup. It's known as an acqui-hire.
A what?
An acqui-hire.
Yeah.
Basically, you acquire a company to really acquire a person or people. Acqui-hire. So you want the person so much.
Why water?
Like acquired, acqui-hire. It's not about water.
Well, it sounds like it's about water. Like that new NVIDIA chip, the H2O.
Okay.
Coming up, President Trump needs a couple of weeks to decide on whether to strike Iran as U.S. beefs up its forces in the region. Next, we're going to talk to retired four-star Army General Stanley McChrystal, who served as commander of the U.S. forces in Afghanistan, about potential U.S. involvement in Israel and Iran in that conflict. Spark Box returns in just a moment.
Now,
the White House says President Trump will make a decision on whether to strike Iran within 2 weeks. Joining us now, retired four-star Army General Stanley McChrystal, who served as the commander of the U.S. forces in Afghanistan. He is now founder and CEO of consulting firm at Crystal Group. His latest book is On Character Choices, or On Character Choices That Define a Life. And General, it's good to have you on this morning.
Thanks, Joe.
Up to this point, with what we have seen and what President Trump, how he's been managing through this, do you think at this point he has been doing the right things, and is the latest 2-week period to maybe negotiate or whatever we're talking about, is that the right approach in your view?
Yeah, I think it is. It's never wrong to take the time to make sure you've thought something through before you do it. We get enamored with the idea of striking all, bunker busting bombs with the idea that a single strike is going to decide something, and it is not. So this is a long-term decision. We need to figure out what long-term outcome we can achieve with Iran, not just with their nuclear program, but with all the things they've been doing in the region for decades now. And we've been looking at this for decades. We've war-gamed potential scenarios about dealing with Iran's nuclear capability for years and years and years. But taking 2 weeks, there's no hurry right now. Israel has clearly created a new opportunity by weakening Iranian air defenses. But the reality is that will stay for a while. And even if they then do a strike with American aircraft, that doesn't end it. There's going to be a day after, and we need to think about what we're going to do and how we'll navigate that.
We had retired General Wesley Clark on, and actually earlier this week, and he said some similar things, but said there should be a 2-track, system where you're ready to do something with the military, but you'd much prefer negotiating. Then he said a couple of things that I don't know, it got me. He said we should get Wendy Cutler to go in, and they wasn't sure whether Steve Witkoff could do it, and I almost said we're going to send John Kerry in too. Is that really where we are right now? And the Journal has something today, General. Just 3 things: the isolationists are unwilling to make distinctions and treat each one of these interventions on their own. No one's talking about putting boots on the ground. This may be nothing like Iraq or Afghanistan. The other difference: Iran almost does have a nuclear bomb at this point. No one was saying that about Iraq at the time. And number 3, an endless war. The real endless war is what we've been seeing from Iraq since 1979. In so many ways, with so much exporting of terrorism and Hamas and all these proxies. Isn't it possible it really is different this time?
I don't think so. And I actually think he nailed it earlier this week. General Clark nailed it. And it was Wendy Sherman he talked about going in, a proven professional. Military power, there's a concept called Anian fleet in being. And it means that your military power is greatest when you are not using it, when it is the potential for action. U.S. military power was its greatest in the year 2000. We had won the first Gulf War, we were a hyperpower. But after 2001, when we started to go into Afghanistan and Iraq, everybody could see how long the dog's leash was, what our limitations were, where we struggled. I think in the case of Iran, our power right now is greatest in its potential, its ability to coerce. So I actually think General Clark is exactly right. We've got to use that power for coercion, try to follow a diplomatic outcome, because the reality is, suppose we bomb, suppose we take out the nuclear capability, and we've got 90 million irritated Iranians who just say, we're at war with the United States, we're at war with Israel. Everything we can do around the world, for as long as we live, we will do. And we say, well, they don't have nukes. They can do an awful lot without nukes, and they could be a great irritation. So for us to enter that, then you get the question, okay, how do you stop that? And at some point, someone will come up with a great idea. We'll put people inside Iran so that we can actually clean out the hornet's nest. And of course, as you just mentioned, that's problematic.
We're back to assuming that Iraq and Iran are the same thing in terms of whether the population, if the mullahs finally lost power and that regime were out of power. Maybe there's not roses being thrown like we were hoping in Iraq, but I'm not sure that it's necessarily the same situation. And when you talk about, well, we're going to hold it over their head, that we're going to, in the threat of military, that means you actually have to be willing to use the military force. And in the past, we didn't scare Iran. And the agreements that we came up with, all they did was find a way around them and cheat and not let inspectors in when they said they would. I mean, how many? It's fool me once, it's my fault, or it's your fault. Fool me twice, it's my fault. I mean, we've been fooled how many times with Iran at this point? And what are the prospects for a Middle East that doesn't have that Iranian regime causing trouble everywhere, with all its neighbors and around the world? That seems like a really. Do you agree with what Israel's trying to do, General?
Well, if I was Israeli, I absolutely would, because Iran's stated policy is destroy Israel. Now
we're the great Satan. We're the great Satan. They're little Satan. I mean, this is ask not for whom. They're after us. They don't like us either, do they?
Let me plant a thought with you, Joe. If you were
Okay.
an Iranian citizen, even if you didn't support the Ayatollah or the regime as it exists, would you still want your country to be a nuclear armed nation? And I would argue you probably would, because being a nuclear armed nation gets you a level of respect in the world. Just look at who's got it and who doesn't have it. Look at what happens to countries who give it up. So if I was an Iranian citizen on the street, even if I wanted regime change, I would still like security for my country, and nuclear weapons would be an additional part of that. So if we assume that we're going to convince the Iranian people, well, you should just give up your nukes and your regime, they may give up the latter, but the reality is their heart may in fact want security.
It almost sounds like you're arguing that they're never going to diplomatically give up their nukes unless you actually take that from them. Like if the Israelis were to destroy, or with the help of the United States to destroy Fordo, and you're no centrifuges left, no scientists left, they're not going to have any choice at that point. If they're always going to be holding on to this aspiration to acquire nukes, this regime can never have a nuke, right?
Well, what I am arguing is it's not 90 million irrational idiots in Iran. It's a bunch of rational people who see the world differently than we do. They have a different perspective. We may not agree with it, and we may in fact oppose it. We may resist it. We may do things against it. But we have to understand they come at it from a different angle, and they are going to have a level of commitment to that. Think of the North Vietnamese. During the Vietnam War, we thought that if we just increased bombing, we ratcheted up the pressure, we would get them to quit. What we didn't understand is they were asymmetrically committed to reuniting their country. There was no level of pain we could impose upon them that would cause them to quit. And they understood that we were different. We had a certain level of investment we were willing to make. Transfer that general concept to Iran and start to realize how we do diplomacy and action in all parts of the world.
Maybe I'm stuck in the past. I have the idea that, there were problems with the Shah and the whole pre-1979, but it was a far better place for its people. You may know, I don't know whether the 92 million, now we know it's 92 from Tucker Carlson. I'm not sure they're all behind this regime. I think it's some type of possibility for an Arab Spring if this were to happen. Once again, maybe I'm naive about it, but you think that the people are behind this regime's aspiration for nukes, 100%.
I think you have to separate the two. I think people can be against a regime and still believe in the nationalist cause of Iran, which could include nuclear weapons as part of their defense. Those are two separate issues.
So if the best possible case, in your view, would be Israel does it on their own, and we assist from, as we have in the past with Israel, but we don't get directly involved. That's the best outcome, in your view?
No, I'm not sure. I think that what we ought to do, I'm not inside the White House now, it may be the right thing for us to help with a strike so we can put this program back far
After
enough.
all this, now you're agreeing with, I don't know, okay, now I'm just confused. Now I don't, so now we've come to all right, we come full circle. I'm glad we agree. General, thanks for your time this morning, appreciate it.
My pleasure.
Okay.
Coming up, we're going to get into the Middle East, military action, global security, AI wars, and so much more with Palantir co-founder Joe Lonsdale. This should happen in just a couple minutes. Do not go anywhere. Squawk Box coming right back.
Pumpkin.care.
Coming up, Joe Lonsdale, co-founder of Palantir and investor in many other defense companies in his 8 VC portfolio. We're going to discuss Israel, the Iran conflict, and so much more. And then later, an exclusive interview with Federal Reserve Governor Christopher Waller. Get inside the mind of the Fed. That's at 8:30 a.m. Eastern Time. We'll come right back. Welcome back to Swat Box. President Trump saying he's going to decide whether the U.S. will strike Iran within the next 2 weeks. Joining us right now to discuss the conflict in the Middle East, the AI tech war, so much more. Joe Lonsdale is here, co-founder of Palantir, founding partner at 8VC. His investments across the defense industry include Anduril, which is ranked now as CNBC's, the top, I should say, of CNBC's disruptor list. So there you go.
Well deserved.
What do you think is going to happen? I not what you want to happen. What do you think is going to happen?
Let's make sure he knows what's going on first. You know the population of Iran?
The population of the Death Star.
He now knows. Everybody knows. 92 million.
Everyone knows his numbers.
92
General
million.
McChrystal just told us 92 million Iranians are all jonesing for a nuke.
No, that's ridiculous. The reality here that people, if you want to understand Iran versus other places, is the people of Iran, the Persian people, the Kurds, the others there, they're much more natural allies of the Jews, of USA, of the West. This was a very modern country before it was conquered by these theocrats.
Exactly what I was saying.
That's a very important point to understand.
They were going to throw flowers at us in Iraq. That never happened.
Yeah, well, and I'm not saying they're going to throw flowers at us here, but this is a lot different situation. And it's I work with a lot of amazing Persian people. I'm really excited to invest in Iran if we can get this country to be some sort of republic, not run by crazy people, and that's a lot easier than doing that in Afghanistan or somewhere else.
Well, so how much do you think this is about? We were talking to the Minister of the Economy in Israel. Is it about regime change, like full-on regime change in Iran, versus just eliminating the nuclear threat?
Well, it's very clear that this administration says it's about eliminating the nuclear threat. That's their goal. I respect that. When we attacked Iraq 20 years ago, even then I thought it was a mistake versus going after Iran. Iran's clearly a really evil regime. So I've been against the Iranian regime. I've been for freeing Iran for a long time. That is not what this administration says they're doing, and I respect that. I think it is critical we get rid of the nukes.
Okay, so from what you know, as somebody who I think of as inside the defense industrial complex, there's a question, this is actually a very technical question, just about these buster bunker bombs. Do you think that they could actually do the job? Because that is the fundamental question that I think Trump is trying to figure out. If it works, I think he may do it. If he's convinced that it may not work, it's a different question.
I'm told that they do the job. It seems to me there's no reason they shouldn't be able to do it. The other thing you can do is you can hit things multiple times, which is not a bad idea, which is probably what I would do even if I was told they worked, if I was the leader, just in case. But I've been told they work, and I think we have to use them.
But the Israeli Minister of Economy said, doesn't matter. One way or another,
we're doing it anyway.
Israel
We're figuring it out.
So why do it as the United States? Why even get involved?
If people chant death to America for years, if people kill American soldiers, and then people try to build a nuke, you should make it clear they can't have a nuke. I think that's like a very basic thing. I don't understand what this new woke right's doing. I think we've actually shown that the vast majority of the right does not want them to have a nuke and supports that activity. There's a lot of Islamist bot accounts online right now trying to pretend that they're on the right, that they're against doing this. But
they're hitting me right now.
The new, what he's describing as the new woke right.
I heard, yeah.
Is the new woke right, is Steve Bannon and Tucker Carlson part of that?
Those guys are part of it, and a bunch of Pakistani accounts online pretending to be Christians are part of it. Let's be clear. There's like millions of fake bot accounts online as part of this. And yes, it is true. There's a lot of good people in MAGA who I respect who do not want to put more troops on the ground. They're angry about wasting trillions of dollars and lots of lives in the Middle East, and I think that is a legitimate thing to be angry about. That does not mean you don't stop crazy people from getting a nuke. It's very
and it's possible that not all interventions are the same, and this might not. It doesn't have to be like Iraq.
Yes, it's a childlike stubbornness because they're so angry about what happened before, which is unfortunate.
I want to pivot the conversation to AI for a moment, if you'd indulge me. We're watching one of the great soap operas of our time play out between Microsoft and OpenAI, and we can get into Elon in a moment. But what do you make of what's happening between OpenAI and Microsoft at this point? They were partners, they are partners, and now it sounds and seems increasingly almost every day like this is a fracturing relationship.
I mean, listen, Microsoft's preserving their optionality. They're partners in some ways, but it seems to me very clear from the outside that they're both preserving their ability to try to fight and win separately, which they have to do.
Can they? I mean, so there's two issues, right? So for Sam Altman, he needs to be able to continue to raise capital, right? This company still is not making money. It's dependent on continuing to raise capital almost repeatedly. At some point, hopefully, it gets to some kind of escape velocity where you don't need to do that. I don't know what you think of the economics of that business. At the same time, it's unclear to me where Microsoft really sits in terms of its own LLM efforts. Obviously, they hired Mustafa away to run that business, and I imagine there's lots of interesting things going on there, but we don't see them in part because they're offering, OpenAI as part of their Copilot service.
From the outside, it seems like a mistake to me that they're fighting. Everyone's saying, "Oh wow, Elon's having to spend $1 billion a month, on his efforts." I think OpenAI is something like $4 billion a month on their efforts, right? And it seems like Microsoft would be a really good thing to have as a close ally. It's not clear to me when these things get profitable. I think a lot of people claim they're going to be profitable in a few years, and they probably know it better than me. But this stuff's going to be really expensive for a while, especially given that they're all fighting.
Can we talk about Doge? We often talk about Doge. I know you're an old pal of Elon's. What do you think about some of the comments that Elon has made about Doge recently, and just talk about fractured relationships, the fractured relationship with the Trump administration right now?
Listen, there's been a lot of mess there the last couple weeks. We still have a lot of our smartest friends working at Doge. They're still cutting billions of dollars of nonsense. So I'm really glad they're there. I don't want them to give it up. They're still fixing a lot of things with these different areas. I guess I'm obviously supportive of everything Elon overall did there. I was a little frustrated with the comment he made earlier this week, which was that, there's a tidal wave of AI coming, and therefore we don't need to worry about cleaning the beach of the government. I think that's actually the wrong conceptual model. The correct conceptual model, Andrew, is that AI is coming to our society, and it's really important that AI ends up lifting everyone up. And the way it's going to do that is through Western civilization's ways of work. So we have the civilization that's built based on the Enlightenment, based on its property rights, its Judeo-Christian values, its classical virtues. Like it's a functional civilization. We don't want to give that all up for AI. We want to go in. We want to make healthcare and education work better. But we have to do it through the way it works.
What did you think he was saying there? Because here he was for a very long time saying we need to actually make government more efficient, and then there seemed to be a little bit of a switch to say actually maybe not. Was that a lesson that he learned just sort of suffering in Washington in the swamp? Or do you think that was really a view that, AI really is going to change everything and basically everybody's wasting their time?
I think making government work better is really, really hard. It takes a lot of persistence, takes a lot of time. On the margin, his time might be better spent building these amazing AI companies, and I think that's completely legit. But I don't think we should discount the importance of fixing government, especially because of AI. Because if we want to have everyone do better in healthcare and education and government itself, these things need to be functional. They need to work with it. They need to block crony capitalism. That means functional government. So you need both.
Switching back, Tel Aviv stock market at an all-time high. Do you think this is the possibility of an actual Arab Spring come true? And if you get rid of these guys, the mullahs, you've still got Palestinian problem in Gaza and all these other things. Is it immediately usher in this golden age of the Middle East where everybody gets along and Abraham Accords are signed by everyone?
It's not going to be everything perfect, but it can be pretty darn good because there's, Obama for some reason wanted the balance of power of these bad guys against everyone else.
He never said the words Islamic extremism.
No, you got these crazy.
I don't understand what.
You have these crazy Islamic radicals funding the Houthis, funding Hamas, funding Hezbollah, creating terror around the region, forcing Qatar and others to play both sides. If you can actually take out those mullahs, you can get rid of that one axis. I think the Abraham Accords dominates. I think it's very good for Israel. It's very good for America. I think it is a lot more peaceful time.
We got to go, but I had one more AI question, but I know we've ping-ponged from thing to thing to thing. Mark Zuckerberg, Meta, spending more money than God right now, trying to. I don't know if you saw. Sam Altman says that he's offering some of his engineers $100 million bonuses.
Ron now he knows what nine figures is.
So you know what's going on.
I had to look up nine figures.
So I want to know, but I want to know, does this make any sense? What's this going to do, by the way, to your business or anybody else who needs these people?
This is the talent war we're fighting now. I heard last month it was $40 million for someone. Before that was $20 million. We're regularly fighting for the very top talent for like $3 million, $4 million, $5 million. Guys like Deanne Gross and Alexander Wang and others, they're probably worth huge amounts of money, and the market's adjusting to that. So I think Mark is actually sane, and he wants to fix his AI was a little bit screwed up. He wanted the best people to help fix it. He's paying for the best people.
And do you think it's going to happen? Because the other thing, listening to Sam, was he has a view, which I thought was interesting, which is if you pay people at that order of magnitude, that actually they're not there to make it happen. They're there for the paycheck. It's actually a very interesting question, because if I told you in advance I'm giving you $100 million, which obviously is life-changing money, it's interesting what you might do.
the way it always worked at places like Palantir and Adapar is you wanted low salary, high upside, and it's much better for the culture. So you're right about that. Some of these people are just such extraordinary talent that it might be more equivalent to like an NBA star you're bringing in. And sometimes the NBA star pays off.
Andrew, it's after tax, it's not 100 million, not exactly life changing. I'm kidding. 50's pretty good. 50's not bad.
We'll call the staff. Get the family office going. Joe, it's nice to see you, sir.
Good to see you.
Thank you.
Oh, that Joe.
Yeah, that Joe.
Nice to see me.
It's actually been very nice to see you.
Absence makes
It has.
the heart. Yeah.
It has.
We're back.
And I didn't tell you just about the number of viewers that we must have in Portugal randomly coming up to me
Great
who
place.
are fans of yours, no less.
Great place. I was there. Cascais, Estoril, Sintra. You went to Sintra?
Sintra.
I could live in Sintra. Could you? Probably.
You know who I think had an
Beautiful,
I think
but
Madonna used to live in Sintra.
A little quiet.
A little quiet. It's a little
But
quiet.
beautiful.
Meantime, not so quiet right now. 8 a.m. on the East Coast. You're watching Squawk Box on this Friday morning, right here on CNBC. I'm Andrew Ross Sorkin, along with that Joe Kernan. Becky Quick is off today. Take a look at U.S. equity futures at this hour. We do have some green on the screen. We had some red before, so Dow up about 45 points, NASDAQ up about 30 points, the S&P 500 up about a little over 4 points right now. The 10-year, take a look at where the 2-year and the 10-year sit. 10-year at 4.4, 2-year at 3.967. Mr. Carmen.
All right, let's get to Mike Santoli at the New York Stock Exchange for a look at the trading day ahead. Hey, Mike.
Hey, Joe. You know, the market really has kind of worked itself into kind of a one-month pause right here below the all-time highs. Take a look at the S&P 500. It's basically done its best not to sort of over-extrapolate any one particular scenario when it comes to the Israel-Iran conflict. It's kind of stayed in this range just below 6,000. So, is it kind of losing energy as it treads water here, or is it just sort of reloading? That's one of the questions. Also, didn't have too much of a reaction to the Fed decision and press conference on Wednesday. Definitely lost a little bit of an early rally, but really not necessarily a panic. Just kind of wait and see across the board. Wait and see on the Fed, wait and see on tariffs, wait and see on the Middle East. Take a look here at oil prices. WTI crude over 2 years relative to its 200-day average. It did just pop right above that longer-term average, although it did also do it early this year, and it really didn't mean anything about a trend change. I just want to also point out, the 2-year range, it's mostly been contained by like $70 to $85 WTI crude, so obviously we've been able to coexist with oil prices at around those levels for a while now. So right now, even though the velocity and the angle of the move is pretty eye-catching, it's not necessarily at a level that seems to be too much of a macroeconomic threat yet. Do want to point out some of the kind of animal spirits infecting certain parts of the equity market. Take a look at FPX is an ETF that owns recent IPOs. And it's just about at a new high. This is a 5-year chart. Remember the whole SPAC IPO software unprofitable tech craze back in 2021? Well, we've kind of reloaded there. Biggest holding of this one is Palantir and some of the other sort of hot ones. So, you're starting to see some of the speculative juices run a little bit, although not necessarily in the broader large cap universe, Joe.
All right, Mike. Very true. All that. Thank you. We will see you again. Thanks.
Get a market flash before the break. Insurance company Aflac just disclosing a cybersecurity incident on its U.S. networks that took place on June 12th. It said that it stopped the intrusion by a sophisticated cyber crime group. It says this took place just within hours. They were able to stop it, and its systems, they say, were not affected by the ransomware. But Aflac said the attack did not affect its services for customers. But, and this is maybe the important point, some files containing claim information, health information, social security numbers, and customer information may have been compromised. So they got it, they say, within hours, but then there's this sort of laundry list of all the stuff that may have been exposed. And I think we're going to have to try to find out what really happened. Coming up, crypto expert Katie Hahn, one of the OGs. She's going to join us to talk about the new stablecoin bill in Congress. She's a former board member at Coinbase, Facebook's stablecoin project. And then we're going to talk about the Fed's rate path for the rest of the year. Fed Board Governor Christopher Waller is going to be with us in an exclusive interview. He'll take us inside the board of the Fed right after this.
Pumpkin.care.
Earlier this week, the Senate passing the Genius Act, the first federal framework for stablecoins. Joining us right now in an exclusive interview. I keep calling her the OG. She really is one of them. Katie Hahn, founder and CEO of Hahn Ventures. She was previously on the board of Facebook stablecoin project, a former board member of Coinbase when the company launched USDC. Good morning, Katie. It's been a long time. How are you?
Good morning. It has been a long time. I'm doing well. How are you? Thank you for having me.
I'm great, thanks. In terms of the Genius Act and what comes next, obviously the House is what comes next. But where do you see the fault lines in all of this? And to the extent it changes the stablecoin world, you know, we have Circle just went public, obviously. What does the stablecoin world look like to you a year or two out after all this?
Well, it looks much bigger. Not just after the Genius Act, it was already growing. And you know, I debated Paul Krugman, the economist, in 2018 on stablecoins, and you can go watch it on YouTube. And I said then this made a lot of sense. And just because a wise person told me, just because something's inevitable doesn't mean it is imminent. And indeed, while many people have been declaring the blockchain and digital asset space dead over the last few years, we have been investing into stablecoin infrastructure, stablecoin applications. And I think what we've seen, Andrew, is just tremendous growth. Let me give you 3 statistics that I know you had Jeremy and Circle, a lot of buzz there, but let me give your viewers 3 stats on stablecoins. Something that didn't even exist, 6 years ago, 7 years ago. $250 billion of supply, and that's up so much year over year. I mean, the growth has been really exponential. You're talking about just over a year ago, $100 billion of stablecoin supply. So it's really growing very rapidly, and we think that growth will continue, particularly with the advent of the Genius Act. But it's not just that. Another statistic that I think people are surprised to learn about stablecoins is stablecoin transaction volume for the first time eclipsed the transaction volume of Visa last year. I'm not sure if you knew that. And then the third thing about stablecoins is they're now the 14th largest holder in the world of U.S. Treasuries, having surpassed the economies of Germany and Norway as the largest holders.
So, Katie, but that raises to me a whole other question, and I think one that's worth delving into, which is, to the extent there are risks in our economy and in our system, what is the chance that the stablecoin universe is upended in some way that we don't understand? Because either there are not enough treasuries that are backing the stablecoins, and a player is not as compliant as you want them to be. That's on one end of it. The other end of it is, if you have the concentration that we're talking about of one company or a group of companies owning so many treasuries to try to back the stablecoins, how should we think about that?
Yeah. Well, when I'm talking about stablecoins, Andrew, also let me be really clear. I'm really talking about fiat-backed, one-to-one, dollar-backed, or fiat currency-backed stablecoins. I'm not talking about algorithmic-backed stablecoins, although a really interesting idea. We did see some spectacular failures in that area not too long ago. So what I'm talking about are fiat-backed. And in many ways, I think one of the really great things about stablecoins, fiat-backed, particularly with this legislation, is, for every 1 USDC that Circle issues, there is $1 in a, for example, JP Morgan bank account. And we all woke up to the limitations of the fractional reserve banking system with Silicon Valley Bank. So this is fully reserved. And I think that's important. But you mentioned the Genius Act, and I think let's come right back to that, because I think the space you called me an OG. I've been in the space for 10 years. One of the things I've been saying since I first came on your show, I've been asking for regulatory clarity and more rules of the road. And I think the Genius Act is exactly that. And I think, if you're talking about risks, let's get some legislation in. So that's why I think it was really exciting that Senate Democrats and Senate Republicans came together to pass this historic bill. But may I say, I think the really transformational crypto framework is also the market structure bill. And I know there's been a lot of talk of both. Of course, the question that is stymied of courts and crypto founders is, what's a security, what's a commodity, who's going to regulate those? And there's a perfect opportunity for the Senate and the House to also get that bill. And I think we saw 70 House Democrats last year join in support of a bill like that. So let's get both passed. And I think that's really Yeah.
Katie, what do you make of just, the reason I was focused on just the risks in the system, because actually now as this business is really growing, we were speaking to the CEO of Tether before, obviously people have been demanding more transparency from that company, for example, for a long time. Where are the risks in the system, to the extent there are some that we should be thinking and concerned about, if at all?
Well, look, I think some of the risks exist in the same banking system, right? Let's have audits. If you talk about USDC, which is a large stable coin, after Tether, it's the second largest market cap. I mean, you're talking about two issuers, Coinbase and Circle. Those are public companies. They're audited by Big Four accounting firms. So let's see, and if companies are going to stay private, let's see the audits happen every year. And I think, I'm not sure about Tether, but I do believe they have a board. Do they have an audit and risk committee? I'm not sure. You have to, when you have follow on next time, you'll have to ask those questions. And those are the questions I would be asking. But I know with respect to USDC, I've been familiar with Circle and with Coinbase for a long time. And when I served on the board of Coinbase, I saw those audit reports, and I saw the procedures and processes in place. And again, I think that's where not all stable coins, and not all stable coins are created equal. I can really speak mostly to USDC given my history and experience, but there are other great stable coins out there. And I know that others are in the works too. Paxos has one also, for example. And we'll see others emerge, I suspect. A lot of people talk about the market opportunity, Andrew, of just yours. But as I mentioned, there's the orchestration layer, also plays an important role. Kind of think of it as Grand Central Station, the rails. That's a really important piece of this all too. And what kind of companies are those? I mean, we saw Stripe just acquire Bridge for $1 billion. And Bridge is not the only game in town, right? We also have, for example, BVNK. That's another orchestrator for the stablecoin space. And I think the reason that you're seeing a lot of new entrants is because the market opportunity is so big.
Hey, Katie, I know just enough to be dangerous about stuff like this. So this might be a stupid question, but if a couple of times you said, hey, it's based on fiat. If you say that to like someone who's orange pilled, it's like, based on fiat. It's like, that's the whole rationale for Bitcoin. So what can we do to make a stable coin based on Bitcoin, or Bitcoin eventually become analogous to what a stable coin is if it finally gets to a point where it just has a very stable, does that ever happen as we get closer to, I don't know.
I think, look, Joe, I'm glad you brought up, I think you're talking about Bitcoin, and I'm glad you brought up Bitcoin. We're obviously also long Bitcoin, and I don't think the two are mutually exclusive. In fact, zooming out, Bitcoin is the granddaddy of them all. This is what launched Satoshi's white paper. If you read it from 2008, it called for an electronic peer-to-peer payment network. So really, stable coins are kind of the original vision of Satoshi. Now, Joe, as you mentioned, there's been a lot of volatility historically in Bitcoin. And, think about gold. People forget gold lost 30% of its value in the 1970s. I mean, there's no denying that Bitcoin has been volatile. But let me tell you an interesting statistic about Bitcoin that your viewers might or might not know. We're still so early, and by the way, we're still so early in the stablecoin space. Although I gave you all those impressive stats, the reality is only 0.2% of payments in the world are made with stablecoins. So we still have a lot of room left to go. Same is true, by the way, on Bitcoin. And those of us who have been watching Bitcoin and investing in Bitcoin for a long time, like we have, we look at the Bitcoin space and we think right now it clearly has product market fit as a store of value. Now, will that ever morph? Will things like the Lightning network on top of Bitcoin also play in the same world as stablecoins? Maybe. But what I will tell you right now is Bitcoin is seeing some real institutional adoption. And here's the statistic I was going to give your audience. In traditional asset classes, you've got traditionally about 80% of other asset classes are held by institutions and 20% are held by retail. And in Bitcoin today, we think it's still so early because the institutions are still just at the beginning of coming in, to the point that Bitcoin, only 10% of the world's Bitcoin is held by institutions. So really, it's very much flipped from other asset classes, and we're starting to see that change. Now, why are we starting to see that change? Things like the Bitcoin and Ethereum ETFs were approved. It's just another signal that this is not going away. Another imprimatur. I know there are plenty in the crypto community who don't need government imprimaturs, but guess what? Institutions do. And so when you have things like the Bitcoin ETF approved, what was it, a year and a half ago? And Andrew, you remember I said ETFs will be approved, and it was very unpopular at the time. People said, you're crazy, they're never going to be approved post FTX. But we saw that DC Circuit opinion unanimously, most liberal judge, most conservative judge, join together and say, really leave the SEC no path but to.
So Katie, given that you've been right about the predictions thus far, we're about 105,000 bucks on Bitcoin. You want to call it? Make it easy. Not easy, but I'll give you a lot of time. 3 years from now, 36 months from now.
Andrew, you know I'm never going to do that. The former prosecutor and me would never. I think it would be totally irresponsible of me to do that because
Katie,
we see the volatility.
I gotta try.
If Bitcoin becomes stable, why do we need a stable coin? Does everything a stable coin does?
Joe, that is absolutely a first-class problem for the crypto industry. And we have dollars out in the world. We have euros out in the world. We have credit cards in the world. We have countless payment apps out in the world. And you know what? A lot are pretty big. We're talking about trillions and trillions of dollars of disruption coming, both via Bitcoin and
based on fiat. You said it. Based on fiat. It's like, you got the answer right. Staring right in the face.
I'm not a Bitcoin maxi. I'm a crypto maxi.
Okay.
I believe in.
No, I haven't told you.
In systems.
I'm willing to. I don't know if I know what I'm talking about. Anyway, Katie.
But Katie does. Katie Hahn, great to see you. Look forward to
Thank
seeing
you
you
guys
soon.
for having
Thanks
me.
again.
Great to see you. Bye bye.
You would never say that.
What?
Just said I don't.
I don't know what I'm talking about at all.
Okay.
You know that.
Okay. As long as we both know, neither one of us know. We got that. Got that in
We
common.
got that in common. We're just seconds away right now from the latest data coming in from the Philly Fed Manufacturing Survey. Take a look at futures right now. You got 84 points up on the Dow. NASDAQ looking to open about 38 points on this Friday morning. The S&P 500 looking to open about 9 points higher. Treasury markets right now. Take a look at the 10-year, the 2-year. But let's go straight to Steve Leisman, who's looking at all the numbers. Mr. Leisman.
Good morning, Andrew. Yeah, -4 on Philly Fed for the general business conditions. It had been expected at -2, so a little bit worse than expected. And that is the third decline in a row. I would tell you, I looked this morning at the other Federal Reserve manufacturing surveys, and they've all been negative recently. So there was a pop-up after the president was elected, and then they've come back down. Let's look at the internals. 6-month business conditions, down 18 versus 47. 6-month the outlook for capital expenditures, 14.5 versus 27, so that's down. New orders taking a step down, 2.3. The prices paid index, now this is good news. It had shot up in the prior month. Now it's 41 versus 59, so that's good news right there. And the employment index, deeply negative here, -9.8. I'm interested as to whether or not there's been a decline like that recently, but I haven't seen it. That's a big step down on the Philly Fed Employment Index. Let me just take a quick look inside it. Let's see, employment. Well, it's not number of employees. Yeah, that was also negative as well in prior months. Oh, sorry, no, it had been positive. So that's interesting, Andrew. That employment index could be another red flag in the concern about the softening job market, Andrew.
Okay, Steve, we've got a special guest. I should say, actually, you have a very special guest for us right now as well.
Yeah, Andrew, I'm pleased to bring in Fed Governor Christopher Waller. He is joining us this morning from Washington. Good morning, Governor Waller.
Good morning, Steve. Thanks for having me on.
Thanks for joining us. I just want to begin big debate, and you can see it in the outlook for rates from the Summer of Economic Projections. Where do you stand in this debate right now over how much concern we all should have over coming potential inflation from tariffs?
Steve, as I've been saying for probably a year, I think the important thing for central banks to do is to look through tariff effects on inflation. This is a long-standing view going back 40, 50 years. So any tariff inflation we should see, and I've given various estimates that I don't think it's going to be that big, and we should just look through it in terms of setting policy and look at the kind of underlying trend of inflation. And right now, the data the last few months has been showing that trend inflation is looking pretty good, even on a 12-month basis. So I've labeled these good news rate cuts when if inflation comes down to target, we can actually bring rates down. I've been saying this since about November of 23. So I think we're in that position that we could do this and as early as July.
Do you think you could cut rates as early as July?
Well, I think that would be my view, whether the committee would go along with it or not. But I think we are in the position that the data's good. GDP growth is going to be near target, our long-run target in the first half of this year. Unemployment's at our long-run target. Inflation's running very close to target. Yet we're 125 to 150 basis points above where the median long-run neutral policy rate is. So I think we've got room to bring it down, and then we can kind of see what happens with inflation. If it got really bad and people got very nervous, you could just pause. But I think we're in a good spot right now for talking about bringing the rate down.
Would you want to begin a process of bringing rates down by 125 or 150 basis points now?
No, I think you'd want to start slow and bring them down just to make sure that there's no big surprises, but start the process. That's the key thing. We can start the process of bringing rates down, and then if there's some big shock due to maybe the Middle East conflict, we can pause. We paused back in January. We've been on pause for 6 months to wait and see. And so far the data has been fine. There hasn't been any reason to, in my view, I don't speak for the committee or the chair, but I don't think we need to wait much longer, because even if the tariffs come in later, the impacts are still the same. It should be a one-off level effect and not cause persistent inflation.
So let's talk about this I guess, difference of opinion with some on the committee. Obviously, the SEP showed that the forecast showed that 7 members don't want to cut rates at all. What is the urgency right now in your mind to cut interest rates? Why wouldn't you want to just wait and see what happens with tariffs and inflation in the coming months before you started cutting interest rates?
Right. So we've been on pause for 6 months, thinking that there was going to be a big tariff shock to inflation. We haven't seen it. We follow the data. That is what we do. We look at the data, and we should be basing policy based on the data. And as I said, if you look forward to if you think this inflation is going to hit in August or September, it doesn't matter. It's the same impact. It's just a matter of timing. And I've been arguing since a year ago that central banks should be looking through this. This has been debated for 50 years in central banking, and the standard rule of thumb is you look through these types of price shocks. And that's what I think I'm arguing that's what we should do. And so if that's the case, start moving on cutting the policy rate.
How can you be so confident, Governor Waller, that a rise in prices from tariffs won't spill over into other prices and cause a broader inflation problem?
Correct. And I think this is a valid concern that my colleagues often have about persistence increasing from this one-time price effect. And as I said, if you go back over the last 50 years, this was always the concern that central banks had when there was an exchange rate shock, an oil shock, a shock to the value-added tax. And the answer was, well, but the tariff's a one-time thing, or whatever the shock is. But then workers will try to increase their wage demands to make up for the higher prices. And that was always the source of the second round effects. But I just don't see that happening now. I gave a speech in Korea a couple weeks ago where I laid out why I don't think this persistence will happen. Mainly the labor market's okay, but it's not strong like it was in 2022. So if you were to walk in today and you think inflation is going to be 6 or 7%, your employer's going to show you the door. They're not going to give you this huge wage increase to make up for tariffs that aren't even showing up yet. So I don't think that this wage mechanism is going to be around to cause these second round effects. And that's always the standard channel for generating persistence. I just don't think it's going to be there.
Do you have concerns now for the labor market? We just talked about the Philly Fed being negative unemployment. You've had this modest rise in jobless claims, and of course something of a step down, along with recent revisions downward to the employment levels. Do you have concerns for the job market?
Yeah, I'm watching it. I mean, it's solid. It's been kind of amazing. The unemployment rate has stayed right around 4.2 to 4.3 for a year, just hardly moving. But we are starting to see things. Like if you look at there was a story in the Wall Street Journal earlier this week that the unemployment rate for new graduates is at a 20 or 25-year high. College graduates are not finding jobs. Their unemployment rate is 7%. And pre-pandemic, it was 5%. So it's that kind of data that's starting to make me a little worried. We're seeing job creation coming down. We're seeing a lot of things like you just said with the Philly Fed that are suggesting that maybe the labor market's starting to soften more than we might want it to. And so in my view, if you're starting to worry about the downside risk of the labor market, move now. Don't wait. People love to talk about long and variable lags. Why do we want to wait until we actually see it crash before we start cutting rates? So I'm all in favor of saying maybe we should start thinking about cutting the policy rate at the next meeting, because we don't want to wait till the job market tanks before we start cutting the policy rate.
At the same time, what's your forecast for how tariffs affect the inflation rate? It looked like there was some impact from the tariffs in the May report. They were offset by other factors that seemed to go negative. How much do you think tariffs will add to the CPI or the PCE, which you follow?
Yeah, so I mean, I think, Steve, you've said this many times. There's some things that are going to go up because of the tariffs, but there's other things that are going to tend to offset it. That's why you can't just look at one category of goods and say, oh, that's driving everything. And I think that's what surprised everybody in these last inflation reports. And I think that kind of thing will just continue. In terms of inflation, I've long argued that if the effective tariff got down through negotiations to like 1%, 10%, imports make up 10% of the price index. So a 10% tariff on 10% of the goods is only a 1% increase in the total price level. And that's if it's completely passed through. We already know that this is not being completely passed through. As Chair Powell was talking about actually in his press conference, everybody has to eat a little bit of the pain from the tariffs. And so not all of this is going to get passed through. So you might see the price level going up 0.3 to 0.5%. But that's it. It's not going to cause persistent inflation. And every model I've seen from private sector forecaster and everything shows by the middle to end of the next year, the inflation rate comes right back down. It's a one-time level effect.
Chris, which is what I used to call you when you were the
You can call me
research
Chris.
director of City Movers. But Chris, Governor Waller, Chris, all right, whatever. So the president said in a tweet over the weekend that the Fed board is complicit in costing the U.S. government hundreds of billions of dollars by keeping rates too high. I want to know if you want to comment on what the president said, but also on this notion of whether the Fed should it take into account the fiscal costs of servicing the debt by where it sets interest rate policy.
Our mandate from Congress tells us to worry about unemployment and price stability, and that's what we're doing. It does not tell us to provide cheap financing to the U.S. government. That is really the job of Congress and the Treasury, to make sure you have a fiscal situation that's sustainable, that will bring the deficits down, and that will put downward pressure on interest rates all by itself. So that's the most important and most effective way to get deficit costs or financing costs down. It's not from what I can do with a short-term overnight interest rate. That's not what's driving the cost for the financing the deficit. So one, it's not our job. Two, there are other means that you should be worried about getting that done. And we're a kind of a distant third in terms of having any impact.
Chris, Governor Waller, thank you for joining us this morning. We'll see you again soon.
All right. Thanks, Steve. Thank you much. See you soon.
Joe, back to you.
Steve, you can imagine. That was like a symphony. It's like a symphony.
You're just like, you're really happy, aren't you?
Turgid.
Your head's exploding with happiness.
Turgid. That was, I wanted, one question I would have, and next time, maybe sometime we can also talk to the governor as well. That'd be great. But do you think do we know for a fact that curbing illegal immigration is inflationary, or does it help since we're not providing health care for so many people that aren't citizens of the country? Do we know for sure? I would have asked that.
Joe, that's a great question, but I think that right now, and I think we need to do a lot of work on that issue, because it is a big and interesting and fascinating debate.
You know what else?
There are two definite sides on that.
The markets were turning around a little bit before that, but nothing like rate cuts to get people in the stock market. Nothing is better. We've got a weekend with what's happening in Israel.
The thing.
Yeah.
Here's the thing, Joe. It's not just rate cuts. It's rate cuts with an idea that you look through the inflation and don't have an inflation problem.
Good rate cuts.
Good
exactly.
Rate cuts.
But for the addicts on Wall Street, there could be an asteroid headed for the Earth. But if someone says something positive about rate cuts, the market is going to. The morning, the market sold off on the asteroid. In the afternoon, it went higher after a Fed governor. We got it.
So that's my gift to you, Joe. Have a good weekend.
Yeah, you too. Clock Watch, be right back. Tesla's robo-taxi service set for a trial launch in Austin, Texas this weekend. Phil LeBeau has a look at what to expect. Hey, Phil.
Joe, if you were expecting a lot of hoopla and a lot of Tesla zooming around Austin, you might want to dial back your expectations. We don't know exactly what Tesla will show on Sunday or much at all. But the expectation is that this is going to be somewhat of a subdued launch of the robotaxi service. There will be a limited number of robotaxis that will be starting their service. And keep in mind, the customers are by invitation. So it's not like if you're in Austin this weekend and say, you know, I want to take a robotaxi. That ain't the way it's going to work. You will have to be invited by Tesla, and I'm sure they've already got the people marked who will be testing the vehicles. It will also be in a geo-fenced area of Austin. So again, it's not like they're going all over Central Texas, going from Austin to Pflugerville and back. They're going to be in a small area. And also keep in mind, the robotaxis will, while they will not have drivers in them, and they will be Model Ys that have the latest autonomous vehicle technology, there will be remote drivers who will be watching the vehicles at all times. So how does Wall Street look at this? Two ways to look at this. Let's look at the Uber bull, Dan Ives. He's on all the time. He thinks that Tesla is the future and that Elon Musk is building an incredible company. He writes, we believe over the coming years, we will see robotaxi deployed in 20 to 25 cities in the US. You want something a little more cautious? Take a look at what Baird had to say. Ben Callow saying, Musk has said there will be hundreds of thousands of vehicles on the road by the second half next year. We model 6,000. Keep in mind that while this launch is getting a lot of attention right now, as you take a look at shares of Tesla, the real event for investors will likely happen, two of them, over the next several weeks. You get the second quarter deliveries early July, and then you get second quarter results probably in the third week of July. That's what's likely to move the stock. Do I think that the shares will move a little bit higher this after Sunday, guys? Maybe, but if it's going to be a muted launch, which is what the expectation is at this point, I think people may have to dial back expectations in terms of how shares of Tesla may react.
Very good. All right. We will keep that in mind, Phil. Thank you. Senate Republicans has set up a potential fight with the House following massive changes to the president's tax bill. Sticking point in the House, raising the state and local tax deduction to $40,000. The Senate would like it to remain where it is at $10,000. Join us now, Republican Congressman Nick LaLota. Congressman, thanks for joining us this morning. You can make the case for $40,000. Can you make the case for taking? Can you make the case for taking it off completely?
Yeah, well, a lot has been discussed. First off, good to be on with you. Long-time viewer, first-time guest, so good to be with you this morning. Yes, $40,000 is the number that the House ultimately compromised on. Some, like me, wanted more. Others wanted less, but ultimately we compromised to get to $40,000, a number that in a district like mine in suburban New York satisfies 92% of my constituents, makes them completely whole. It doesn't get all the way to the remaining 8%. But that's the harmony that we struck in order to unleash everything else in the bill. The reduced taxes on overtime, reduced taxes on tips, reduced taxes on Social Security, extending the rest of the tax cuts. But here's the reality. The 2017 Trump tax cuts expire at the end of the year. And when they expire, unlimited SALT comes back. So in order to extend the cuts, some are advocating for some cap on SALT, and we're being reasonable about that. And the $40,000 number strikes the right harmony, in my opinion, Joe, on what is both good for my constituents and good for the country.
You're just absolutist. It should be zero. Why should anyone be double taxed? If you've paid federal taxes, you should be able to deduct what you've already paid. But that's never going to happen at this point. But this half measure, I'm not sure why 40,000, why that cap makes sense, other than it just helps the people in your state.
The SALT deduction is rooted in fundamentals like anti-double taxation and federalism, and an unlimited SALT deduction was the rule, as a law of the land for 100 years before 2017. and then the low $10,000 unfair cap was implemented in 2017. And while my constituents benefited from, and America as a whole benefited from, the lower individual rates, the lower corporate rates, the other fixes within the tax code from the 2017 bill, my constituents and the suburban constituents from these high tax and high earning blue states had that success, had those benefits throttled by the low cap on salt. Some are advocating, I think this is what you're saying, for unlimited on salt. But in order to, an unlimited salt would cost $1.3 trillion over 10 years. In order to unleash the lower individual rates, keep the lower business rates, the AMT fix, those in 2017 thought to cap salt in order to unleash these things. That's the harmony they struck in 2017. We need a better harmony now. The political math is different. They need votes from districts like mine in order to pass the bill. I need to ensure that my middle class constituents especially get made whole on salt.
Well, you know how purists think. It's like, well, wait a second. You've already spent the money, so we can't, so the taxes are already gone. They would say the government used to be 7% of GDP. I know it'll never be there again, but talking about, well, we got to cover, we got to use this, salt provision to cover the money that we've already spent that we probably shouldn't be spending. What about the Medicaid stuff in the Senate bill? A lot of people think that is probably a better way to make sure that states that are able to game the system for people that don't necessarily need it, or they get compensated more for healthy people of working age than people with disabilities and pregnant women. What about what the Senate is looking at there? They're solving that, and it wasn't solved in the House.
Yeah, I think the House bill struck a good balance on that, Joe. First off, the focus is on ensuring that able-bodied adults go to work or seek work or volunteer 80 hours a month. That ought not to be a partisan issue. That ought not to be a divisive issue. That's common sense. Even Bill Clinton supported something very much similar to that. That's the key element on Medicaid in the House bill. We went further to say that illegal immigrants shouldn't benefit from Medicaid as well. Those are the two hallmark issues in the House bill. We'll see where the Senate bill ultimately irons out. I don't see how they get the 50+1 votes for those sorts of reforms you described there. So I'm not yet sure on how real that is, but there's a hell of a lot of consensus, both within the Republican conference and within the country, on work for able-bodied adults and getting the illegals off. That just makes sense. That ought to be bipartisan. I think that's ultimately where the bill lands on Medicaid, Joe.
But when it comes back to the House, is it going to pass?
I hope so. I think America needs this one big beautiful bill. I think that both your viewers, the business community, the Main Street folks, we want stability, we want predictability. We hope to be able to give it to them very soon, hopefully in the next few weeks, if not the next few months. I think the bill should pass. The House bill is good. The House bill is represented by folks who represent districts that Trump won by 50 to Harris by a couple. It represents a broad diversity of thought that went into it. I hope the Senate doesn't futz with it too much. If it does, we risk tanking the bill. The House bill as is puts us on the right track, Joe.
All right, Congressman, it was good to finally have you on. Thank you. We'll hope to see you again at some point.
God bless. Enjoy the morning.
You too.
Coming up, a look at the markets ahead of the opening bell on Wall Street. We're coming right back after this.
I need insurance.
Home Depot reportedly making a bid for buildings products distributor GMS. That's according to the Wall Street Journal, which did not detail a potential purchase price. Shares of GMS, though, are up sharply this morning. On Wednesday, serial dealmaker Brad Jacobs said his building products company, QXO, had made an unsolicited bid to buy GMS for about $95.20 a share. That's about $5 billion in cash. Home Depot, QXO are both racing to secure a bigger share of the market for construction supplies. Last year, Home Depot bought another company, SRS Distribution, for more than $18 billion.
SoftBank looking to team up right now with Taiwan Semiconductor to build a $1 trillion industrial complex right in the heart of Arizona to build robots and artificial intelligence, according to Bloomberg, saying that SoftBank officials have had some meetings now about this, has spoken with federal and state government officials, including Commerce Secretary Howard Lutnick, trying to get at some of the possible tax breaks that they're hoping for to make all this happen. The report saying SoftBank CEO Masa-san has been personally trying to gauge interest from other tech companies, including Samsung. So TBD, watch this space, as they say.
And Reynolds American, the maker of Camel cigarettes, is rolling back its DEI programs. It comes 2 weeks after anti-DEI activist Robbie Starbuck singled out the campaign in an online campaign. Reynolds, which is owned by British American Tobacco, said it would cease participation in a corporate equality index and sponsorship of pride events, also end affirmative action programs that were mandated under the Biden administration.
Let's take a final check on the markets before we hand it over to our friends on Squawk on the Street. Right now, you got some green on the screen on this Friday morning. You're looking at the Dow up about 137 points, the NASDAQ up about 79, 80 points there, and the S&P 500 looking to open about 18 points higher. Treasury yields right now on the 10-year and the 2-year, 4.431. On the 10, the 2-year at 3.950. And oil, given everything that's going on in the Middle East, WTI crude, if you want to buy oil by the barrel, you can do it for $75.08. The weather's a lot better, Joe. See, I come back into town. Got to help you here.
It's been
weather gods.
It's been brutal.
Have a great weekend, everybody. Make sure you join us on Monday. Squawk on the Street begins right now.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Sarah Eisen, Mike Santoli at Post 9 of the New York Stock Exchange. Kramer in favor of the morning off. Pre-market is holding gains as the president sets this 2-week window on any decisions regarding U.S. action in Iran, whose leaders, by the way, are holding talks with EU officials in Geneva today. Oil is above 75, but it's off the highs. Our roadmap begins with some of the geopolitical and macro risks for stocks. Investors watching the Israeli-Iranian conflict as it enters a second week and weighing the latest outlook from Fed Chair Powell.
Plus, one analyst calling this weekend's expected Tesla robotaxi launch a key move on its path to a $2 trillion valuation. But we are joined by a vocal critic sounding the alarm on Tesla's autonomous driving efforts. And big tech's AI ambition. SoftBank reportedly eyeing a U.S. AI hub. NVIDIA seeking humanoid robots at a Texas AI plant. And Meta continuing its big spending spree in the space. We'll hit all of it.
Let's begin with the markets this morning and the Fed as we do wrap up this holiday-shortened trading week. This is what Fed Governor Waller had to say about rate cuts a few moments ago on Squawk Box.
Right now, the data the last few months has been showing that trend inflation is looking pretty good, even on a 12-month basis. So I've labeled these good news rate cuts when if inflation comes down to target, we can actually bring rates down. I've been saying this since about November of 23. So I think we're in that position that we could do this and as early as July.
Pretty consistent message from Waller, who was on with us several months ago, arguing for, I think at the time it was 4 cuts in 26 or 25.
The difference now is that it doesn't feel like he is where the center of the Fed is, because there were, 7 dots or forecasts at the Fed that didn't want to see any change, even though they kept their median as 2 cuts this year. Look, Waller consistently has said we need to look through any tariff price increases. It'll be a one-time effect and just get going here on rate cuts because we're restrictive and we don't want to go when it's too late and we see the market crash or unemployment spike. It jives more with what the president is saying, though he's not going as far as the president in terms of saying 250 basis points of cuts. But it is the message that is certainly out there in the market, Mike, that the inflation underlying trend is good. It's softer inflation. And even if we see a flare up on tariffs, that's not going to be something for the Fed to necessarily respond to.
And more to the, and the other side of it is there is a heightened sensitivity within the market to signs of softening labor conditions. And Chair Powell on Wednesday really wanted to set that aside. He said, yeah, demand for labor is coming down, but so is supply. We think that the unemployment picture is fine. So I do think Waller is defining the dovish edge here. He kind of said as soon as July, before anybody asked him, do you think July is live? So he wanted to get that out there.
Yeah.
Now, he didn't dissent on holding rates steady this week, right? Because it was unanimous. So it obviously is he's going to give voice to that position. The market did take a little bit of heart in it. You got a little bit of a bump in equity futures. Bond yields didn't do a whole lot. 2-year yields twitched lower by a couple basis points on that comment, and then more or less sat there. But I do think it's an interesting one, and it's kind of, you can sense, at least in the press conference, you can sense there's just a general discomfort with the prospect of the Fed being in easing mode if you're getting headline inflation prints that are well in the 3s.
Sure.
Right? And so that's just, whether they should or not be uncomfortable with that, you would imagine that they might be. On the other side, there's this line that says the consensus is not all that hawkish because they all boosted their PCE inflation estimates. They reduced GDP, and they reduced the long-term neutral rate, yet they still say 2 cuts this year.
Yeah. Food inflation just had its biggest monthly jump in 3 years. You got oil up 20% for the month to date. JP Morgan says if Brent sustains at 75, that would add a couple points to global consumer prices. And of course, the Fed chair did talk about inflation on Wednesday. Take a listen to that.
What we're waiting for to reduce rates is to understand what will happen with really the tariff inflation. And there's a lot of uncertainty about that. Everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs because someone has to pay for the tariffs. And it will be someone in that chain that I mentioned between the manufacturer, the exporter, the importer, the retailer, ultimately somebody putting it into a good of some kind or just the consumer buying it. And all through that chain, people will be trying not to be the ones who pick up the cost, but ultimately the cost of the tariff has to be paid, and some of it will fall on the end consumer.
Meantime, more concerned this morning about the quality of the data we're getting, right? We know its survey response rates have been falling for the past several years. Today it's Apollo arguing that the price inputs into CPI, maybe a third of them are based on calculations on other inputs to CPI. Basically, I guess, is what Torsten Slok says.
Yeah, and Powell was asked about that, and he, more or less sidestepped or dismissed it. It basically said, look, we think we can do our job with what we have, and it probably just means you need to kind of use these composites of multiple data sources. I mean, there are third-party inflation indicators out there that are even kind of these algorithms that just surf the web and the world and say, I don't think it diverges very much from the CPI process, but it is something, certainly to keep in mind. And I think the Fed it really desperately wants to just kind of be invisible at the moment and stay out of the way and just wait for a few shoes to drop.
They want to be prudent, right? They want to wait until the data signals which way to go, and they feel really justified right now in wait and see, despite the fact that the president continues to hammer the Fed chair, calling him too late Powell and imploring them to cut rates. I thought another point that Waller made on the oil prices this morning when he talked about, okay, there is a risk that higher oil prices do start to seep in and raise inflation, but guess what? We can pause. We've been on pause for 6 months already now. We can pause again if there is some sort of concern that higher oil prices are going to spark inflation. I mean, President Trump, relentless, too late Jerome Powell, costing our country hundreds of billions of dollars, truly one of the dumbest and most destructive people in government, and the Fed board is complicit. Europe has had 10 cuts. We have had none. We should have 2.5 points lower and save billions of dollars on Biden's short-term debt. We have low inflation, too late, an American disgrace. So he's just getting nasty about it.
We've had none since he was president. We had 100 basis points of cuts late last year. But Waller was asked, is it the Fed's job to consider the government's cost of debt? He said, no.
No,
it's
he
not.
said we're a distant third in terms of who can affect that. Let's get to Israel-Iran tensions and the White House still awaiting word about what the president is thinking on this matter about doing. Megan Cassell is in Washington with the latest. Megan, what do you hear?
Hey, good morning, guys. So the biggest headline here is the President Trump saying yesterday that he'll decide within 2 weeks whether or not the U.S. military will join Israel in its attacks against Iran. And I'll say, guys, the president regularly sets these 2-week deadlines for something to happen. He often doesn't stick to them, but this latest statement does clearly suggest that nothing is settled at this point and that he's continuing to consider his options and that all of them appear to remain on the table. So that means the possibility of a U.S. strike is still distinctly there, but the White House does continue to push for a diplomatic solution.
Look, Iran is in a very weak and vulnerable position because of the strikes and the attacks from Israel. And with respect to the president's statement, I shared that with all of you. And he has been very direct and clear. Iran can and should make a deal. We sent a deal to them that was practical, that was realistic, or they will face grave consequences.
Now, a group of European foreign ministers, those are from the UK, France, Germany, and the EU, they're all in Geneva today to meet with Iranian officials. And they've been clear that their message is strongly in favor of some sort of a negotiated deal, even as they emphasize, as the White House does, that Iran can never have a nuclear weapon. But that meeting today comes after the UK foreign minister was at the White House yesterday to meet with Steve Witkoff, he's the Middle East envoy, and Secretary of State Marco Rubio. U.S. officials are not a part of today's Geneva meeting, but the White House has framed it as a meeting between European leaders and Iran. But they added that the president does support diplomatic efforts from our allies that could bring Iran closer to taking his deal. So guys, we'll see what comes from that later today. Guys.
You know, there's a lot of talk, Megan, about will he, won't he, and everybody has opinions inside his party and the other side, the world. The question I'm wondering is what it would look like if he did. I mean, we're talking about, we're not necessarily talking about, American soldiers on the ground. We're not talking about a prolonged war. I know a lot of people compare it to Iraq. That's very different from where we are now. So what do you hear we're actually talking about when it comes to this big decision?
We don't know exactly, but what it seems like the most likely possibility is using these bunker-busting bombs, as they're known, which would require the use of American B-52s and American pilots, in order to bomb, most likely, Fordo, the underground nuclear facility site that they think U.S. bombs and military equipment would be required in order to completely take that out. There are questions about whether it would be effective, and President Trump, based on all the reporting and everything that we know is out there, has been asking these questions of whether it would be effective, but that seems like the most likely possibility. The concern is whether that leads to anything more.
Really quickly, Megan, these talks in Geneva with some of the EU leaders, does that complicate U.S. efforts in any way?
It looks like, based on the UK foreign minister being here yesterday and going straight there, that they are trying at least to be in alignment. So it seems like, based on that White House statement, they're supporting this meeting. You do wonder, I wonder at least why US officials aren't there, but maybe they think that European officials at this point are the better messenger and that it's easier to use these intermediaries rather than the US and the Iranians meeting directly. The White House says they're still talking, that communication is ongoing between the two sides, but at least the meetings for now are between these third parties.
Yeah, we'll keep an eye on that. Some indications the Europeans themselves might be getting a little more hawkish, talking about zero enrichment. Megan, appreciate that. Megan Cassell this morning. When we come back, Tesla, some pushback from one critic ahead of the robo-taxi launch expected this weekend. We'll talk to them after the break. Take a look at the pre-market here. Got some options expirations to look at. That'll make the close interesting, but for now, futures steady in the green. Stay with us.
and make it count.
Tesla is tentatively set to begin offering robo-taxi rides, as you know, in Austin, Texas on Sunday. Wedbush analyst Dan Ives today says that autonomous is the next key driver for Tesla, potentially fueling it to a $2 trillion valuation. But our next guest is sounding some alarms. Last week, his organization, the Dawn Group, staged a demonstration in which a Tesla in full self-driving mode drove past a stopped bus and hit a dummy resembling a child in 8 separate trials. The Dawn Group's co-founder Dan O'Dowd joins us this morning. He's also the co-founder and CEO of Green Hill Software, which sells technology to Tesla competitors like Ford and Toyota. Dan, thanks for the time this morning. Good to see you.
Good to be here.
The video demonstration got a lot of views in the last several days. What did it tell you?
Well, it's very clear. This software does not know how to recognize a school bus. And therefore, not recognizing the school bus, it doesn't realize the law that you have to stop when a school bus stops and the lights come on or flashing. You're required to simply stop and wait for the children to clear and wait for the school bus driver to turn off the lights, and then you can proceed. If you proceed past a school bus, like we see right here in the videos, it will run down a child that comes out from behind the bus. That's why there's a law that you have to stop. We wanted to show this. We showed this over 2.5 years ago. We demonstrated this. We did a New York Times full-page ad showing this, saying this happens, and no one did anything. The government didn't do anything. Tesla didn't acknowledge it. Tesla didn't fix it. That didn't work. So we did a Super Bowl commercial. We showed a Tesla running down a kid as it goes past a school bus, and nothing happened. Somebody asked Elon Musk about that commercial, and he said, well, I guess it shows everybody that we have a self-driving car. I don't think that's the conclusion. He didn't try to fix the problem, didn't do anything. Now, a few months later, a kid in North Carolina gets off a school bus, and a self-driving Tesla drives right through and smacks right into him, puts him in the hospital, breaks his leg, his neck, on a ventilator. It was terrible. He did survive. I don't understand why they won't fix these problems.
Well, the technology, I think a reasonable person can assume, is going to get better over time. Does any of this mean that Tesla shouldn't be allowed to run some geofenced operations in a limited location?
Yes, the product they haven't finished implementing it. It doesn't know what a fire truck is, so it doesn't know that it has to pull over. Doesn't know what a police car, an ambulance is. Doesn't know what a do not enter sign is. Does not know what a one-way sign is. This software, it's nowhere near done, and it's 3 years. We've been doing this for 3 years, and they haven't implemented any of those things. They haven't solved any of those problems. They haven't said when they're going to solve them. You're putting products on the road that will just ignore all the warnings on the road and drive right into trouble. Over 50 people have died in self-driving accidents with Tesla. It's terrible.
Have you done similar tests, equivalent tests on Waymo?
We've been in Waymos and tried it, but we can't buy a Waymo right now. We would love to, but you can't get one.
So you're saying there's no comp here?
There's no comps? I mean, we know what a Waymo does. They've done 10 million rides with not a single fatality, not a single serious injury. Tesla's had around 50 fatal accidents with this self-driving software. It's worse than the Ford Pinto in terms of the number of people who've died from defective software, and they just keep selling it to more people and telling people that it is safer than a human driver. It is not. Absolutely not. We have the tests to prove it. It should not be on the road at all. Send it back to the engineers and have them teach it what a school bus is and what a fire truck is and dozens of other problems. That's not all there is.
Oh, this guy's an idiot.
This group of Texas lawmakers sent a letter to the company urging them to delay the rollout on Sunday. Is there any sense that's getting any traction within the Texas legal apparatus?
Right, well, they sent the letter. There are new laws that are coming into effect in September 1st. The letter basically says, please don't launch until you meet the requirements of the September 1st laws. And then if you do meet all those requirements, and there's a bunch more rules and tests they have to do before they can put it on the road, then we support that. Yes, don't put it on at least conform to the basic rules they've set.
There's also no shortage of armchair quarterbacks, Dan, who watched the video and argued that no human would have been able to avoid hitting that dummy. Is that a fair retort?
Yes. No. Any human, not any human, some break the law, but any human following the law would have stopped. When they saw the school bus stop with the lights flashing, they would have stopped. We pulled the kid out after they, as they're driving past the school bus, which is what happened to the kid in North Carolina. He steps off the bus. The self-driving cars stop. It's still moving. You shouldn't be moving. If you follow the law, you will be stationary when that kid comes out. That's what you expect. Kids run behind buses. Buses are very tall. They're much taller than children. So if a kid gets off the bus and he wants to cross the road, he goes in front of the bus. You can't see him. Then he comes out suddenly. That's why you're not allowed to keep driving when you go past the school bus. It's a simple law. It's been around since I was a kid, at least when I learned to drive.
We're all well aware. Dan, appreciate you sharing some context to the video that made the rounds. We'll see what we get on Sunday. Thank you very much, Dan O'Dowd.
Thank you.
Still to come on the show, Kroger raising sales guidance, posting an earnings beat. Also ahead, CNBC investigates whether big tech should get multi-million-dollar tax breaks for their data centers and how these deals are impacting individual state economies. When Squawk on the Street comes right back.
You are full of crap, sir. I don't think it's ever going to be 100% bulletproof. Nothing ever is. But it's probably a lot better than human drivers. So take that as a debate. You prehistoric old man. Well, 597.90 broke. Whoop, 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 whoop. Good morning, retail traders. Okay. So I got a message from Rob. He had a family member pass away last weekend, so a little moment for silence for him, for Rob. And then we had the tragic with Funk, and we'll add that to the mix with his family. So let the ceremony begin. Okay, back to order. I don't know if there's a time limit on moment of silence, but we got 6 minutes left, and I'm going to make me some chai tea. I am going to move my alert up to the 200 on the 1 minute EMA. Waller Fed says position for cuts as early as July. Well, Philadelphia Fed Manufacturing Index minus 4% versus 1.7, which I don't know if that's good or bad. There's a fly. The fudge. You're dead now, whatever the heck you was. Don't look like a fly. You should know better to drive and bother me in the morning. Los Angeles Lakers. The Bus family is set to sell the Los Angeles Lakers for $10 billion after buying it for just $68 million. God. What a return. Wow. $68 million they paid for the Lakers, and they're selling it for $10 billion. There ought to be a law against that. Too much profit. She'd break it out. Oh, gosh, here we go already. Dead gum, Jim. Life's going by way too fast. We hit the 200 on the 1 hour. We had 3 white soldiers. We got an inverted hammer. We could probably scalp it here, but that's on the 1 hour. Where he pulled back to the third soldier, which was the old support, 597.90. I'm going to set me alert right above this here 21. There we go with that. We got one platform up. Let me get the other one. Now, I like to trade with 2 platforms. Oh, shit. Might not have got that right. Very key sensitive. We've got a tweezer bottom on the 1 minute right at open here. Well. The options are cheap. $5.99. We got a gravestone. So I'm watching the 5.99s right here on the SPY. We're off the 50. Yep. June the 20th. Strike 5.99 off the 63. Right here is the tweezer bottom. 102 if I can get it. 1.03 for my first entry. Now I don't know if it's going to work or not, so I'm going to type in off the 63 some risk. One minute. That's not an I need a 1. Right now you're up $100. Some risk. You could go ahead and scalp it here. Where's the 21? 121, yay! I'm out. I'm out. 128. Okay, I'll see you guys at the beach. Anybody take that baby? You're still in. Whoa.
That's a tweezer top, Randy.
We got a tweezer top. So this was a tweezer bottom off the 63 EMA on the 1 minute, 10-4. TWEE is tweezer BO. Tweezer BO. La 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 la. 135. We do have a resistance, Randy. I think we ought to have a poll and see if we get Bad News Bob in here today with some bad news. $141. A plus trade, thank you very much. Randy got 138. And we're coming up to the double top. $5.99. Damn. 154. How do you do it, Jim? Well, It's not easy. We just now broke resistance and a good volume today. Reuters says Israel media is initial reports indicate missile impacts on Tel Aviv, Naga, and Nafave. Fed Weller says he don't want to wait until the jobs market tanks before cutting rates. Now what the hell? They're forward thinking for once? Why would they say something like that? They've not been saying that for years. Can anybody answer that question? How dare them make this economy look good? Uh-oh, Randy said, dang it. We got a triple top. Okay, Randy, you think we're going to hold support here? You get to 50. $160, baby. Okay, this is your 21. 63 we bounced off of before. Prepare ye in the name of the Lord. See, they're right in here in this zone right here is where I'm going to jump in it, if not now, and grab some. As you know, every trade's risky, so this is at 124. And I'm going to type in some risk, tweezer bottom. They could drop more. There's your 50 right there. So I'm going to add on. I didn't go in big at the 124, but now I'm going to go. Right about now. 108, 106. Okay, we're at 63. So now I'm in. Whoops, 104. Ooh, no. We're at 96 now. Well, average is 109, not 104. We're at the orb. here at 89 cents. So now I've got 24 of these suckers. .89. Right now we're bearish. Let's break. I'm almost even. Got an average of 99 cents. Damn. So we've been here at the bottom for 4 and some minutes. I think we need to break out or do something, or we're going to fall more. $597.53's got to hold. Where's my SPX? There it is. SPX is flagging out here. We're at the bottom of the orb on it too. Definitely at support. Coin up 922. How can that be up? Oh, pre-market. It spies back at support again. So we've been down here 1, 2, 4, 6, 8, 9 minutes. SPX the 20th. Wonder why that's not coming in. Well, that didn't hold. Oh, because at 21 a.m. That's why. This is not good. Come on, baby. SPX.
Kind of waiting to see if we'll catch this.
60/20s. $4.90 to 60/20 calls. There's 510. A tight stop on this one too.
I'm on 60-25, so I'll let you know when I'm done. I don't want the 60-43 mark, 60-44 mark on yes. Which is 200 SMA on the 30.
So we got an average of 475. This buys are at 7.6. So there's a 2-minute time frame here. We've been sitting down here at support for 8 minutes, just under 8 minutes. And I got the SPXs at 475 and the at 60.20 and the 599s at 99 cents. And they're not looking too good. Good. We just now hit the 200 on the 1 minute. If this don't hold, I think I'll get out. Right now we've held so far. That's on the 1 minute.
I've got a limit order in on the 60-25s for 290. That'll be the 200 SMA on the 30. could go to the 63 on the 5, which is a little bit below there.
Okay.
Nice, that's that shit. That's 1 to 5.
See if it holds here.
Yep. I'm in the 60-25s at 280. Alright. 20s at $40 a contract here. There's your tweezer bottom on the 5.
We're at some major support levels here. 2 minutes not holding up one yet, but 30-minute is. On /ES, we're at the 9. And we got a double bottom on the 1 minute. In the 5 minute, we're at close to the 63.
Yeah, that's the one I'm watching. I want to see that 63 hold.
Yeah, but plus you got 30-minute, you're on the 9.
You're also on the 200 SMA.
Yep.
What I'd love to see is it at the 63 on the 5 and then give me a tweezer bottom. Because then I think we come back up and do a retest at the bottom of the orb.
break it. Slash ES is at the VWAP. And we're at the 200 here on the SPX on the 1 minute EMA. We've got to break that. I'm going to use that as the major pivot point right now.
You asked me something, studio? You tagged me?
Who, me?
No, I'm talking to studio. He's saying read his question though. Oh, that's his question.
Has a question.
Yeah, it was just, why would anybody hold over the weekend?
Oh, yeah.
Answer is you wouldn't.
God, come on, bitch.
God, GRR? Oh my God, how did I miss that this morning? I had eyeballs on that.
SRM is up also.
It's got a freaking sizzle index of 65. No, I'm sorry, 30. That's insane.
Watch Meta here. Well, well. We got a triple bottom on the QQQ on the 1 minute. We've got a head and shoulders on the IWM. SPY's at the 200, holding the 200 with a triple bottom. And the triple bottom on the SPX on the 1 minute.
Randy, you're still okay as long as you don't lose this 63 on the 5 minute on the ES. Don't
Yep.
panic until you see that. Because I think you're going to come back up and retest the bottom of the orb.
30 minute, we're on top of the orb right now. Bottom.
Well, I was talking about the 5 minute ES.
Yeah, I bet I'm set. We got a tweezer bottom on the 30 minute above the orb, kind of forming. Let's see. We're above the 63 now on the SPX in the 1 minute. Almost bought 4 more down there at that bottom. I should have doubled down on that.
Yeah, scalp those 60-25s out there. It went from 280 to 320, and I just scalped them. It took about 2 minutes.
Oh, I'm gonna get my tea. I was gonna make a tea here. I'll be right back. I'm gonna get back down here again. I might double down, but there's something about going long in Tilray by about 20,000-30,000 shares.
I mean, I see higher highs and higher lows on the 5 minute on the S, so I wouldn't panic just yet.
No. I'm even right now on them. Well, I was. Break it.
If you bought those calls with me, you're back up $30 a ton, correct?
We got a vertical 1, 2, 3 also. We did have a horizontal, now we got a vertical. Well, there went the vertical.
There's your 63 touch on the 5 minute.
Got a megaphone.
I want to see if this holds. Nope. Alright, they're going to push it down to, yeah, 60-30. From around 60-30 to 60-28. go ahead and load some calls.
Well,
If you're streaming my chart, you see exactly what I'm looking at. Looking at the 60-10s.
you got a two-headed snake right here.
Yeah, we're in a support zone right here.
Yep. Let's see what we got. I got in them $2.
60-10s?
No,
Oh,
the 20s.
gotcha. One more push into that zone. Trying to get the 60-10s for around 340. Sellers wearing out here.
5 minute hit the 200 EMA. I'm going to tweezer bottom right here if this holds. I got 277 average here on SPX. We're at 270. I'm coming up to the 9 on the 1 minute. Target. There we are. Jimmy's even. Apple's pulling back more. The SPY landed on one of my supports here, 595.77. Or yeah, I had 595.77. My first initial entry on SPX was at the VWAP, and we pulled back from that to a previous high right here on the 5-minute. We still have the tweezer top with a hammer, kind of consolidating. Not sure if it wants to hold or not, but it's definitely bearish. $60.34 even.
reflected there. I'm just looking like they're.
Let's go. Coin's got a double bottom. A little higher low. Netflix had another breakout today. I don't understand that one at all. Why it's up so high. And there's your slash ES. Still holding that 60, 28, 50 area. Right above the 200 on the 5-minute. Tweezer bottom on the 30-minute. 2-minute, the 200 SMA, and then nothing really on the 1-minute that held it up, but some definitely on the 30 and the 5 and the 2 have supports.
I'm really interested in that ES 30-minute chart.
Yep.
You're setting up for 3 black crows, and it bounced off the 63 7 times PM. I've got a freaking alert set on that 60, 24, 75 area where the 63 is on the 30-minute. If it knifes again, that's where I'm buying. It's already bounced off there multiple times today.
Yep. I like it because it's still above the 21. And then you got a tweezer bottom. There, that didn't. It's hard making up its mind. Shit. We got close to getting to even.
Did I just speak that into existence?
You got your 3 black crows right here.
Oh my God, there it is.
Right off the 63.
In the 60 pins at 330.
Big knife there on Netflix.
Studio, you should have got a better entry than I did, buddy. I think a little long. I saw him go to 310.
AMD's at the 200 on the 1 minute. NVIDIA new low. TSM new low. NVIDIA 143, I think sucker's selling off hard. AVGO's down $4.47 to a double bottom here. My third support from Friday, or Wednesday. Just going to take my time. Nothing's holding up very well. We're flirting with a 200 SMA on the 5 minute on /ES. Should I do that? Come on, Jimmy. Got new 3 black crows with megaphone on 1 minute at 155.
You touched the 200 EMA on the hourly to the meeting. We'll see if it gets a tweezer bottom off this 200 EMA.
Yeah, we broke support on the IWM.
I'll just put a big part on the show.
Looks to me like I'm going to have lunch. Need to bounce here.
Minutes for this candle. You see what I'm watching on my screen?
Yeah, I think you're watching the 200.
Hourly on the ES?
Yeah.
Yeah, the 200 EMA.
Yep.
You see how I perfectly touched it?
Yep.
I'm wondering
You
if
mean
we get
SMA,
the
right?
bottom off of it. No, the blue dot is the 200 EMA.
Oh.
The white dot is the 200 SMA. So we're at the 200 EMA right
Yep.
now.
I'm glad you put that on there.
I am too.
They can't see your screen.
Okay. Oh,
You-
my freak, am I not streaming? My
Nope.
God, my bad guys, my bad guys. Oh, that's on me.
You got a lot on your shoulders right now.
I know, but still, I thought I'd started streaming.
Spy tank, Kroger rips. Them damn groceries. Fuck.
Support here at this price level. We're tweezer bottomed earlier.
Three black
Bottom there 4 times.
crows on the 30-minute. And you're coming down to real strong support on the 30-minute right now. Pretty close.
13.50 on the ES is where it's bounced on the hourly 4 times already today. I'm gonna buy it there. Scalp it again. Pins are still loaded. Finger on the trigger. Minutes left on the candle. 8 minutes left on the candle.
That's what Tesla says here. We got a new low on AVGO.
I see another tweezer bottom right there at that level. I'm gonna freaking buy like 3 or 4 contracts. I never go that heavy, but I'm looking at what happened between yesterday's close and today's open, and that level on the hourly is freaking strong as fuck.
Now what's the deal with X?
They announced that they are going to let you start trading through the platform.
This is strange. It's like it got a new something, new ticker on it. The stock likely to open lower amid Iran conflict. Don't know about this. Now I've got a serious support coming up on the SPY here at 593.69. That's a triple bottom on the 1 hour. Pre-market low. So I don't know, we might have something here coming up. Reversal in the market.
Yeah, I'm moving to the 6,005s. It's getting real damn close on my chart.
Yep.
The 5 minute, I mean the 30, hourly candle has only got 5 minutes left on it.
$6,000s. I'm looking at the 6,000s now. I still have the 60/20s, but I'm getting some 6,000s.
Are you really finding the trend magnificent? If the trend has been that this some bitch reverses out here to 60.13, that's been the trend since yesterday.
You got 360 for the 6,000s.
Left on the candle, I'm hoping it'll push it.
I need 177 on this, or what do I need? 2.
Yeah, 3 minutes sell off. Then it can squeeze your bottom for me. not selling off.
Kroger's a monster. I'm up.
Left on the early.
Damn, I was up. My SPXs were up for a second.
Push hard to my line and then squeeze bottom for me. I'll go big. Seconds. If it doesn't squeeze the bottom, I'm scared it's gonna 3 black crow on the 1 hour. Which definitely points wrong.
God, come on. Where's Barry? Just
I'm in the 6,005s at 345.
okay. These bull traps are just not good. Look at that sell-off again today. Really not much that can stop it, keep going.
I ain't scared yet. It hadn't lost its total, I want to hope.
Yeah, we're at the triple bottom on the hour.
Yeah, the hourly is the one I'm watching.
And triple bottom on the 30-minute. But it's got to hold here. I mean, this is tight.
It is.
I understand the X.
Hey, you took contracts over here. Up. Let them turn back red. Grab, oh, found it. 240, so 38 contract. 48 contract. You just hit 50 a contract, you're at 60 a contract. If you're greedy, this ain't my fault. I'm getting out. 60 a contract is 25%.
We hit the 21 before, stopped right here on the 1 minute. Can we break the 21? Now 11:08 Eastern Time, 8 minutes post my lunchtime. And I've got the 6,000s at 320. And I got a bunch of 60/20s. They're a little bit too far out of the money. So we got to have a reversal. If we break the 21, we'll get back up here to this other resistance area. Just under 59.76. $59.76. 59.
The tweezer bottom on the 1 hour looks good.
59.7638. Attempting to sell the 6,000s, but no. See if it keeps going. I need 158. Always clean? Hello? Yeah, what's up? $4. So we're coming in on the 50 SMA and the 63 EMA. 74 is the SMA and the EMA is under 76. Times 24. Getting ready to go in the kitchen and do a sniff test on my chicken breast. A 410 on my 6000s. I got 320. There's 420. So I'm up $300 on my SPX. And I need 20. So we just hit the 50. And we're coming close to the 63. And we're at 440. And I'm going to get out of them here. So at least the 6000s. Out at 440. They're at 140, 145. I need a little more out of them. If we get up here, I'll be in the green. If we break this resistance, 59.7638. No, I don't know what the 59.7822 means. Got to mean something. The Randy. So we're getting up here. And I'm at 145. I sold my 6000s. I need 158 for my 60/20s, and I'm in pretty big on these. And I'll sell a bunch of them just when I get up there, so I won't be in so deep. Come on, go. We're at another resistance right here. If we can break this. 59.79.56. God darn it. Right when you get close. I knew it. Well, I didn't know it, but we definitely hit a resistance there. Well, I'm going to go into the kitchen real fast and walk away from here and see if that helps. Still in the red for the day. I'll be right back. So far, it's kind of a blah day. See if things start respecting here soon. God darn, Matt Kroger keeps going. Coin bounced off that triple bottom I mentioned. They're talking about it here on Schwab.
Heavy volume area, that would be one area to be on the lookout for.
Good stuff, Rick. All right, let's get back
Where
to
is that?
Joe and talk about your final
265.
trade. That is NVIDIA, and taking a bit of a leg lower today. What are your thoughts? What are you seeing on this one?
Where's
Markets,
Caroline?
Move lower. Obviously, very volatile stock. Obviously, very economically sensitive stock. The economy is going to do well. NVIDIA is going to do even better. And I expect that to happen, but right now we're just in a wait and see. We're still really digesting the
NVIDIA bounced up off that support I mentioned.
One trading day ago, so we're
Double
still trying
bottom.
to figure that all out. Tech stocks doing a little bit worse today than the rest of the market, as maybe near-term interest rates.
We got to break 59.79.40 on
If we
SPX.
had a dovish Fed, so that is just part of the narrative. But this chart pattern has really been fantastic lately. I do expect to see all-time highs later on in the year. But for the short term, just like these other two names, I'm expecting some consolidation. Another area where I'd be looking to sell a downside put, collect some premium, and of course in NVIDIA, I'd like to be buying an upside call too, with the premium that I outlay for that put to get into the name. So just looking out to September, I'm not expecting a lot of movement in the summer months. I want to be in these names in the fourth quarter though.
Okay, let's get back out to you, Rick. Can you take us through the technicals on
He's a
this one?
trippy looking.
Yeah, sure. Another one that's never boring, even on slower days here. And you can see that when we have a situation here where we had a low point and then a high point, now we have kind of inched above that old high near 142, but we haven't had any kind of huge breakout to the upside yet. For now, it's just holding
Yin
on to
yang.
that low area here with the obvious sights being set on those highs near 153. So now we can see that our moving averages are still diverging. The faster ones are still outpacing the slower ones. We're not really seeing them start to...
The faster ones are outpacing the slower ones.
To be on the lookout for. By another
So he's got it mixed
we can
on here
see that
too
momentum
then.
is slowing down. when we look at the RSI, our green trend
he's
line
talking
has
about
been
SMA.
interrupted. Our red trend line is heading downward across those peaks. We can see that price was making higher closes, but RSI is making lower closes. Not really what you'd want to see if you're bullish, but
really?
not necessarily also a head for the hills moment either. It could just be that this is a consolidated phase. And that's kind of the tricky point here. That's kind of what we keep saying with a lot of these names lately here. It feels like it could go either way for some of these areas right now. It seems kind of precarious. But we can see as well, though, if we were to start to move lower, there's a couple supportive areas to consider just below. There's our 21-day exponential moving average and our volume node where it starts to develop below about 140. And then if we were to move higher, those old highs, 153, that's the area to watch.
Precarious, I feel like that's the operative word here. Thanks, Rick, so much for that. Joe TA as well, thanks for your company. And really appreciate you both for being here today and joining me this Friday. Well, coming up next, we are going to spotlight triple witching and the S&P 500 rebalance and how these two events could impact your investing strategy. Trading 360 will be right back.
Triple witching. When's that?
Today.
And where's Caroline?
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
June.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including
June 20th. Oh, that's today.
Tailor the platforms to your unique needs with new
No, I had no clue.
and track market trends with up-to-the-minute news and insights.
What's that?
Trade brilliantly
I've
with
literally
Schwab.
said his wife, and I made a post about it.
You did?
You gotta read your Discord more.
The spank.
Not only a triple witching, it is the biggest triple witching in history.
It is. How'd you figure that out?
It's in the post that I put up. Let me see.
Uh,
Where's that? It was early this morning.
no. I might have had a
I
different.
made it at 6:21 a.m.
Yeah, I'd have had a different game plan, I think, if I'd known that.
You're on Central Time, so it should be 6:21 your time there.
Yeah. Okay, we need a nice breakout here. We got another resistance coming up. Oh, that's NVIDIA. Never mind. Let's see here. Okay, I got it.
So I created a Discord, like just to play around with some bots, and I found that there's a RSS feed that I can pull any kind of Twitter post from and post it to like a breaking news channel. If you want me to ever show you how to do that? The things that I'm posting in your Discord, I'm just stealing out of the practice one that I set up.
Yeah.
But it'll take like the Kobesi letter and any Twitters that you want to follow, like Donald J. Trump or whatever. But as soon as a Twitter post hits those, it'll take that and it'll post it to your Discord channel, so you're not behind on the news.
Well, I got a new resistance above my moving averages. The 6,000 now at 520. I say I got to break these moving averages before I start making money on this one, I think. The 60-20s. I'm a little bit too far out. I'm going to go sniff my chicken, see if it's good. It's that day where it might start going bad, and we'll see here. That's one of the toughest things to keep in your kitchen if you own a restaurant. Especially if you go through a lot of chicken. Used to work at a Heritage cafeteria where we'd get like 3 or 4 cases of chicken breast. We're at resistance right now, so I'm about even on these things. I'm green now. So if we break the 200, had to add and add and add and add on these. We're at 160. I can sell them right now and all the worry's gone. But if I get 20 bucks out of them, that's quite a bit of change. Right now, 165. I'm really don't know what to do here. We're at a double top. If we keep going, I mean, we've had a good run from the bottom already. Yay. We're at a major resistance right here. So if that breaks, I mean, it's going to be a pretty nice little run up. Put a chart over here so I can see it. Run back up to the 200. SMA on the 30-minute /ES 59.87.85. Should I sell it? I'll be right back.
But also for the traditional finance.
Major resistance. Back to that other support, 59.7940. More drama. Get ready again. I got out some of them, and I still have a couple. I'm glad I did, because I'd be slaughtered. It's one of them days where I said, well, I'm above even. Jimmy, you made your volume too low that you don't hear. How'd I do that? Hello. I didn't have my headphones on one. Okay, get ready. So go back to 6,000s. I'm gonna go get my pan, get my chicken started. $6,000s are at 225. We've got a yin yang right here. Nothing's holding up very well. The SPX 6000's at 230. Break it.
Not a great summary of the overall market. So, you know, the fact that where we are in terms of prices and in the summertime, I don't know what'll happen today, but market's not in a great spot, frankly, fully priced and all this other things going on, Tom. And of course, I mean, then there's headlines, of course, Tom.
I think, you know, the takeaway from the Wednesday presser from Fed Chair Powell was, I don't know, kind of bifurcated. I don't know, you know, the dot plots were just kind of in disarray, it seemed like. But let's expand this conversation. Bring in Joe Mazzola, head trading and derivative strategist at Charles Schwab. Joe, you know, I mentioned Waller, you know, with the potential for a rate cut next month, but he's an outlier, it seems like, at this point. What was your takeaway from some of Powell's comments and the fact that, you know, they're reflecting that inflation is going to continue to rise? Well, we've seen PPI and CPI data that's pushing back against that. And, you know, they're lowering their GDP expectations. Why are they being... Kevin said they leaned a little dovish. I thought they were a little more hawkish, where I don't even know.
No, it's not hawkish.
Yeah, I thought it was a little bit too hawkish compared to what the data's been saying.
Yeah, remember this. Even though the median dot plot, you know, forecasted 2 cuts this year, if you look at kind of how it broke down based upon the voting members,
I'll be right back.
Projections and the dot plot itself, you know, there were 7 members that
still in these
cuts at all for the remainder of the year. So I would look at that as a hawkish report for sure. You know, Waller not only is an outlier, but you remember it was a unanimous decision to hold rates. So even though he might be an outlier, he didn't vote to raise rates. Or excuse me, to lower rates. I think he's, you know, trying to prep the market should any more of the inflation data come in soft, you know, that the Fed could move. Once again, I would agree with you there, Tom. I would not expect that, nor has the probabilities really changed that dramatically for July cut. I think if there is one that's going to happen, you know, it's the likelihood of September. I think we're probably around the 68 to 70% probability that might occur at that point, and you get 2 for the year. But like I said, there was a good amount of Fed members, 7 of them that are saying no cuts this year. And it's difficult because, you know, while the Fed is in a tough position, I think that they're also looking at this as I don't want to say favorable, but at least a place for them to kind of sit on their hands and wait for the data to come out, wait for the kind of, you know, what happens with the tariffs as we have the expiration of the the expiration of the kind of the hold on the tariff on July 9th. So we'll see what happens. I think the market believes that there'll be an extension, and that's kind of probably why we're seeing these levels around 6,000 where we're trading right now. But as you guys mentioned, it's very much headline driven. The semiconductor news came out, and you saw a 2% pullback in the semiconductor stocks, which pulled back the market overall. But then, yet this morning, as you guys mentioned, you know, the Waller dovish comments raised it. So it's a lot of whipsaw action. I think part of that is what Kevin mentioned. We do have options expiration today. There's a large collar that's rolling off. The JP Morgan hedged equity collar is rolling off on June 30th. So you're going to start to see maybe some of that interplay as they move for that next quarterly hedge. But that's, you know, right at that 5,900 strike and the 6,000 strike where we're sitting right between those. Once that rolls off, it might be interesting to see whether or not those levels can get penetrated either to the upside or the downside, because at that point then you start to see maybe some of those gamma characteristics change as those positions roll forward.
Yeah, and Kevin, you know, with it being, you know, options expiration, triple witching, you know, there's no conviction, it feels like, to direction right now, just due to the fact the uncertainties out there. Trump coming out and saying, hey, he's going to decide over the next 2 weeks what to do about the Iran-Israel, conflict that's going on over there. So that's kind of creating some headwinds. But as you mentioned, with the, you know, the equity market just a couple % off its all-time highs, you know, maybe there shouldn't be a lot of conviction for any direction right now, because there's so much out there that has yet to kind of pull us in one direction and say, okay, we've got the all clear here for equities, or maybe we don't and we need to pull back 5%. So there's no real conviction, right, Kev?
Right.
Yeah, I want to be clear
Break it.
before we go any further. Christopher Waller was dovish, not the Fed. was dovish. They were rather hawkish in their comments. Now, I think the 2-week notice that President Trump gave was a bit of a window for more negotiation before military action happens. I think he's giving Iran a window there to negotiate their way out of this. I don't think Israel wants to negotiate, but I think that 2-week window was key there, and that was a slight. I think that's why you see crude oil a little bit. Well, now it's unchanged, but it was lower this morning. So I still think headlines are going to drive that over the next several days, but that's why I think maybe crude oil's not higher now. Direction-wise,
there we go. 250.
There isn't any, right? There's bigger volume, but the direction, you should take no directional cues from a triple witching expiration. What you should take, there'll be bigger volume because some positions, the rumor is about $6.5 trillion in option positions coming off today, either coming off, being closed, or being extended in terms of duration. So that'll bring bigger volume, but where the market is, I think the market's moving based on everything that it's seeing out there. But I thought Waller was definitely dovish in bringing a July Fed rate cut at least into the discussion. Right. Yeah, is he an outlier? Yeah, like Joe said, 7 people. I mean, the Fed is polarized right now. Right. 7 people had no rate
255,
cut, it was 9
260,
2 rate cuts. So I mean, the Fed is, it's like an 8th grade party. Everyone's on one side, everyone's on the other side, and no one's in the
275. Yay!
I just think that the Fed is really lacking direction right now, and that's what you see, a very quiet bond market based on that. So that'll play out, but like I said, Christopher Waller made a great point. That is, if inflation is starting to dissipate, or tariffs are starting to dissipate, then the inflation that is under control, unless we're going to see goods inflation during the summer, which a lot of people say,
290
should be able or have the room to come down, guys.
Yeah, and Joe, Kevin makes a good point here, because if they're lowering expectations for GDP to 1.4 from 1.7%, but then they're raising the estimates for, inflation moving forward, they move those numbers up, the core and the headline.
We're at the 63 right now.
I mentioned this earlier this week on the show. It feels like if the consumer has pulled back a little bit, GDP is slowing a little bit, it's almost like inflation's taking care of itself, and that the tariffs are not going to matter. And as you mentioned, if we get another extension in early July of this 90-day pause, is it going to rear its ugly head if the consumer is taking care of maybe that demand side where, hey, inflation's not going to go up if the consumer's pulling back, right?
So I think there's a couple ways to look at this. Number one, if you were to take a weighted average currently, of what tariffs could represent, it's probably about a 15% increase in prices, right? If that's across the board, that's kind of a weighted average that includes, higher tariffs in China, and then kind of what we see in the EU and so on and so forth. So how much of that is already priced in? I think that's what we're trying to figure out. Now, Waller specifically said in his comments, that's a one-time hit, right? That's a one-time hit. I'm not so positive about that just because I think there's other effects that kind of matriculate their way through the system. We have seen a little bit of a pullback from consumer spending, and you remember that's 70% of GDP. Now, is that calculated within the number that the Fed is predicting? There's probably a good likelihood that is, or within a few basis points of that. So I think that makes sense. I think what the market really needs to ascertain is that 15% effective rate, is that correct? Are we higher? Are we lower? We just don't know. And that's the hard part. And that's why you see a market that's kind of stuck in the mud while it's waiting for that catalyst, whatever that, to take it either up or push it back down below these levels. And we just kind of happen to be sitting, like I said, right square in the middle, really between those two strikes.
Today's a scalping day for sure.
Position. And once that rolls off, who knows, where we're going to head either way. but we've probably got about 3 weeks before some news could push the market one way or the other. But in the interim, the headlines that just keep flashing back and forth, it really is. It's a tug of war. It's a push and pull. I mean, we're down one, we're up some, and so as of right now, I think what's been difficult for market participants to really figure out, especially those that are hedging. We have started to see more and more hedging activity, but the bottom line, guys, is it's not paying off. I mean, if you've been a hedger all year, right? If you continue to buy some of that downside protection all year, it's been a bit of a wasting asset. And so we'll see, whether or not this is activity that continues as we move closer and closer to that July 9th date.
Yeah, going to be, more uncertainty, more headline risks out there. The VIX above.
Okay, we're coming back to support right here. We got to hold this or we drop more.
Off of those all-time highs. Kevin, you mentioned next week. Earnings a little bit light. There's a couple big names. FedEx is in there, Micron, and Nike next week. But a lot of data across the board. Soft data, hard data. That could sway markets. And then you throw in the fact that Fed Chair Powell is testifying in front of Congress on Tuesday and Wednesday.
Yeah, exactly. So that I think the data next week will be significant. Durable goods, second look at GDP. And then income and outlays, remember that PCE number is vital, so much so that they put it in the dot plot, right? So I think that's going to be a big week. You're right, earnings, you just mentioned the 3 big names that are coming out with earnings next week. The rest are also RANs. And then it's going to be headlines again, right? There'll be another weekend of headlines. Let's see how market participants fear or are worried about the weekend and what could happen over the weekend. Let's see how the market closes today in that final hour, because not only will the market move, but it'll move with some volume because of expiration. So I'm certainly going to watch the last hour today. I think it's vital because it'll show you if the overall market has fears going into the weekend or those are starting to dissipate. I don't think they're starting to dissipate at all. Guys.
Yeah, lots to cover. Joe, real quick, your take here on the outlook for next week. Got some housing data that's been disinflationary recently, but Powell could change the narrative. He could get some hardball questions for once out of the Senate and the House during his testimony. It probably won't happen. Most of the questions a lot of them are embarrassing from a political side. But what's your take here for next week?
He's been called quite a few names in the last week, so I'll give him a reprieve on that one. I will say this, though, a couple of things I'll be watching next week. Jobless claims on the initial side, that's been ramping up. Continuing claims really is continuing to move probably in the wrong direction. If you're looking for a job, that means it's harder and harder to find a job when you've been out of the workforce for 6 months. And then PCE. So we've seen kind of a disinflationary move on the CPI and PPI data as of late. What is that? How does that translate into PCE at the end of the week? And that's important because that is the Fed's preferred look at inflation. Now, in all fairness, how much of this data that we've seen as of late, takes into account tariff expectations, or at least the tariffs as they hit. So I think we're probably a little bit early before we start to see some of that data roll in there. But it's the trend I'll be looking at a little bit more as opposed to the flash data.
All right, lots to cover and expiration all day today. That triple witching taking place, so we'll continue to watch that into the close at the end of the day. All right, guys, let's take a quick break. When we come back, we're going to take a look at Tesla. EV maker stock is still under pressure this year, and the company holds its robo-taxi, the highly anticipated robo-taxi event on Sunday. It's going to be a slow rollout, but this is definitely one in the crosshairs of investors. Stick around.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Fast Money here on the Schwab Network. We're talking Tesla ahead of the Robotaxi event. Stock's down about 20% this year, off about 34% from those all-time highs that we saw in December. But's made a nice little rebound here from those April lows. Kevin, when you look at this one, you know, everybody, there's going to be a lot of fanfare around this, right? It's going to be a small, maybe 20 vehicles, Model Ys, that are going to be, you know, driving invited people around town. So it's going to be a slow rollout, but maybe it should be at this point, right?
Yeah, exactly. And everyone should pay attention because the local politicians are trying to stop them from doing this on Sunday. So watch for headlines if they break on that. Elon Musk may power through, but it sounds like they want to delay this to September 1st or sometime in September. But if they do power through and roll these out on Sunday, it's not going to be, you know, 100 cars. It's going to be a small amount, but like you mentioned, with invited guests. The bigger events coming up for them might be their second quarter deliveries coming out in early July, their earnings coming out scheduled unconfirmed for July 23rd. Those are big, but this is that Dan Ives put out a note today, pretty bullish on Tesla, talking about the new age of what, you know, of Robotaxi and everything, that very positive note. So we'll see which is which, right? There's headlines coming up that could weigh on the stock, but if you're looking long term, you know, if you're valuing this company on something other than a car company, then this Sunday, if they are able to roll it out, it's going to be a big deal, that's for sure.
Yeah, the market's definitely pricing not just an EV company at this point. Joe, let's bring you back in here and get your take. As Kevin mentioned, Dan Ives putting out that bullish $500 price target. He said that there are other businesses, Tesla's going to be $1 trillion valuation alone in AI, you know, moving into the future. He's always bullish on this name. But, you know, I think there's optimism here because of the fact that, you know, the Waymo, I've used a Waymo. I heard they cost like $250K each car. This is rolled out, unmodified. This is just going to be their full self-driving software. So the licensing, you know, I guess pie is going to be massive if this works out well for Tesla.
Well, remember, guys, it's a decade in the making, right? I mean, we were supposed to have this in 2020. You know, we were supposed to be 1 million autonomous cars on the road in 2020, and that was, you know, promised made in 2019, and now, you know, we're pushing this out another year. So this is a great PR event. It's a great marketing event. If it works, more power to Tesla. I think that Kevin brought up a really good point. If you look at how the options market is kind of pricing in implied volatility next week, right? So this would be, you know, following the news of what happened over the weekend versus the following week where we actually get the reports for deliveries. It's the following week that actually has the implied volatility built into it, right? That's where people are a little bit more concerned about the news and they're willing to pay more premium for it than they are next week, given the fact that the autonomous rollout of the cars is happening over the weekend. So I think that was a very critical point in that this is, I don't want to say not that important, but I think it's a good PR marketing opportunity for Tesla going forward. Now, that being said, as you mentioned, Tom, we're talking 20 cars, but, you know, I think really it's the capabilities of the autonomous and the rollout that traders or investors are paying more attention to. And then ultimately, what does that lead to down the road, right? And that's where this stock gets its premium, and that's where people are looking at this in terms of saying, what could this be with the robots, with the robo-taxis, and so on and so forth. So I think that, while this is a good PR event, not sure a lot comes out of it in terms of valuation. But I will say this, you better do it right, because if you don't do it right after, 6 years of waiting now, you could see the stock pull back. But, to me, it's the following week that I'd be paying more attention to.
Yeah, there's going to be a big event on Sunday, the Geofence in Austin, Texas. Joe, you got an example trade for us here on this one with implied volatility, as you mentioned, over the next couple options here is starting to ramp up.
Yeah, and I want to go back to the trade we looked at a couple weeks ago, if you don't mind, and that was that front spread where we were buying one, put selling two. We took a little bit of credit for that. Well, the stock's rallied since then, and now we're trading up around that 323 level. And so, we do have a little bit of room. We've gotten above the 50-day moving average. We've gotten above the 200-day moving average. Like I said, I don't think there's as much built into this weekend as there is the following week.
Okay, lunch is ready.
I'm actually looking at a trade at the following week, so the July 3rd expiration, where we do have that implied volatility built up, where there is some skew on the downside, where people are paying up a little bit for those puts, and I want to take advantage of that by selling a put spread. Now, in all fairness, yes, you are paying a little bit more for the out-of-the-money put that you're buying against the out-of-the-money put that you're selling in terms of the skew. But at the same time, you can sell a $5 wide put spread, selling the 300 strike, buying the 295 strike. At the time I priced this up, it was about $1.40. I think it's down to about $1.30 now. But either way, that still gives you, $23 of downside before you get to that short strike, and you add that $1.40 credit, takes your break even down to $298.60. The expected move between now and then is about $35. So that's where that additional premium is kind of built into this. And if that does occur, then this trade's not going to do very well. But what I do like about this trade, or what is in consideration for this trade, is it does give you some support with that 50 and the 200, which are above these break-even levels. And so basically, you put this trade on if you think that this event, could be potentially bullish, or if you think that there's nothing too bearish that's coming out of this event, as I think there's a probably better way to look at this. The stock has pulled back a little bit. I mean, remember, we got a nice little bump off the Musk leaving Doge, but the stock itself has lost $200 billion in market cap since Musk left Doge. So there's a lot that's kind of built into the premiums right now, and this trade is trying to take advantage of some of those overbid premiums on the downside.
Yeah, that 200-day moving average just about 310, 50-day moving average about 303.60 at this point. But let's break this one down. July 3rd weekly option, so just a couple weeks, 13 days to expiration. Selling the 300 put, buying the 295 put, $5 wide, short neutral, the bullish put vertical, collecting roughly about $1.40 credit. It's trading about $1.25 right now. So whatever you collect is what you can make on this one. If you collect $1.40, you got $360 in risk on this one, but that's all the way below 295. Kev, high probability of success on this one, where you can take a directional bias, but you don't need to be overly aggressive, right?
Yeah, expected move out to July 3rd, $36. So selling the 300, about a 71% chance of finishing out of the money on the put. And this is just a way, like Joe said, gives you the ability to be wrong and still profitable, right? Tesla can go all the way down to $300 and you're still profitable. That's a fairly
What kind of trade is that?
sell-off for this name. So this is one of those passive plays, takes advantage of the higher levels of implied volatility, selling a high probability put vertical, collecting theta, and of course, risk defined.
Yep, the idea is this thing remains above $300, and that spread just goes to zero. But you do have some trade management that you can do if it starts to go down. Maybe after this event, implied volatility comes.
Today's lunch,
also,
YouTube.
take that into consideration.
The chicken salad.
Before it maybe ramps up back up in July 3rd due to that delivery number that Joe mentioned. All right, great stuff as always. Thanks to Joe Mazzola, head trading and derivative strategist at Charles Schwab, for joining us. But coming up after the break, Andy Swan from Mike Folio. He's going to take a look at sentiment data and affirm the buy now, pay later stock is up over 100% over the last 12 months, but about 25% below its recent highs. Stick around.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experienced.
We're at the resistance again, the 63. That's the third time. We broke it. That double top. I still got one of those 6,000. It's 230. Just don't seem like we got much mustard today. We got to break this 59.76.38. $2.45. Come on. Teslas are moving. Cup and handle on the 1 minute. So far, we've been hanging below yesterday's support. So we really got to break it Wednesday. Coming back down again. Okay, I've had lunch. It's over. I've still got one contract here of the SPX. The 6,000 strike. And I'm down on that one. So, sold all them bastards. Jim's got one SPX. I sold two of them at 280. They gave me $100. Those are the ones I'm in now. One. So I'm just I'm not feeling very bullish today. Had one bad trade. Good one, then a bad one. On SPY, but the bad beat the good by far. This is my third trade on the second. This is my second trade on the 6,000s, and we're back to even. At 230. So we got to break this trend line. $59.80. Should have bought some more there at $190. Two more. And then I'd be back to 3. Okay, drink my chai tea. I let it get cold on me, but that's okay.
Companies like Visa and MasterCard, which really have a lock on cross-border international transaction payments.
Okay, we're back to 185 here.
Technology, so I say evolving. It's
Here's Circle.
in terms of what they do and what the value added of their technology is to the fintech ecosystem. But you can actually customize programmable APIs through their network, and essentially you're offered tokens or coins, which is basically
CRCL.
helping support a network. And if these fintech networks do get regulatory approval and become legislative into actionable technologies, it certainly can be something fruitful going forward. But these IPOs that have come out as of late, CoreWeave is another one just to mention that I think we talked about on this program, or at least another one that I've covered on the show. Has also gone higher considering their new technologies. I think Bitcoin itself looks like it's moving to the upside, front running the entire market. But I just looked at some of the financials for Circle, and they are growing their sales, there's no doubt. If you look at the market cap as of today, it's increased significantly, obviously, since yesterday, around $52 billion. They generated $1.8 billion in revenue last year. If you just back up to 2019, they only generated $3 million in revenue. So the company is growing exponentially. There's no doubt. The questions is adoption. How are they going to crowd out incumbents like Visa and MasterCard, which, by the way, are down in the last couple of weeks since the IPO of Circle. And, of course, valuation, trailing earnings, 35 cents a share. So it's trading at over 600 times trailing earnings. So one would say that that's rich.
George, issuer, stablecoin, major play here. It's up sixfold since it IPO'd. The analysts are predicting the market cap could double to $500 billion in stablecoin over the next 18 months, could go to $2 trillion. This is a key player here. What is, I see the word disruptor, and I'll be honest, I don't know enough about this. What is this doing? What's the difference between this company and, say, Bitcoin? Is this several coins? Is it a different kind of coin? Is this competition for Bitcoin? What does this company do that makes it so incredibly popular, and the thought is that it's going to keep exploding?
Well, I think in a nutshell, they're basically different technologies. And of course, the technologies support blockchain in some capacity. And blockchain is essentially a network. I mean, I like to put these companies and these tokens kind of like IPOs of stock. Essentially, these coins are issued, and of course, they're tradable, and they're rewards for supporting a network. The networks are the programs that these coins essentially are rewarded for supporting. And these programs are essentially unique to different kinds of technologies. Now, when it comes to Circle, it's all about low-cost way of building fintech applications and smart contract services. Now, you have to consider the fintech ecosystem. I'm going to put
I don't even have the website on here.
PayPal in that space is a fintech company. So, the question is does what Circle provide in terms of the technology, is it better? Is it better than the transactional prowess of companies like Visa and MasterCard? Is it faster? Is it more secure? Again, these are all questions that I'm posing that should come about to present value for what the program that Circle essentially supports, or the technology they support. So again, the technology is being moved higher in terms of the capitalization of the company. They're raising a lot of money to support their program or their network. But the question is going forward, adoption. If stable coins are essentially, if you just think about this, anchored to the US dollar, then why use stable coins at all? Why not just use dollars? So these are questions that I'm thinking about in terms of how these companies provide value-added services or technology services that are better than the incumbents or better than anything that exists already. So I think this is an evolving technology. I think the market for IPOs right now is quite rich. There's a lot of chasing right now. There's a lot of complacency in buying. And it's not just, stable coins, it's not just CoreWeave, but we're seeing across the board in other areas like the space for, not just the crypto space, but we're also seeing it in the other areas of the marketplace right now as well.
Yeah, I think that's part of the thing. The Genius Act was passed by the Senate and now has to go to the House for a vote. So these stable coins, which
the Genius Act
based earlier, but now it's starting to get adopted more. And you're hearing every company coming out and saying, hey, we're going to probably have some type of stable coin. And maybe this does start to move out Visa and MasterCard and some of these other payment type stocks because they're not going to get that margin. That asset
we got a 1, 2, 3 set up on SP/ES.
Their recent highs also. All right, great breakdown for us. Appreciate it. That's George Tillis, senior markets contributor here on the network, looking at Circle. Kev, it's only been trading for a couple weeks. As I mentioned, hitting all-time high. That new Seaport Global Research put a buy rating out on it, $235 price target. You mentioned some of the metrics that they were talking about. $260 billion market cap in stablecoin right now. They said can grow to over $2 trillion in the longer term. So the opportunities in the growth,
Tesla, Rob.
Everybody's kind of focused on. So I looked at a strategy, Kev. I'm going to be a little bit more conservative.
Getting up to resistance.
Where a stock like this can go. Somebody could come out and downgrade the stock or say the valuation's too high. Stock could go down $50, $60, $100. So want to stay risk defined in names like this. It does trade those options, and that's why we're looking at it. I went out to the July 3rd weekly option, so just a couple weeks till expiration on this one.
I'm at 240 on my calls.
Put vertical, neutral to bullish. Sell the 180 strike put. Buy the 170 strike.
CRCO, are they expensive?
Put vertical. I've got a $3 credit. This is where it was trading earlier. It was trading about $3 credit. Trading closer to like $210, $220 right now. So it has gone down because the stock has moved a little bit higher. But this is a volatile name. Price discovery warranted on this. They got some pretty wide.
Okay, we're looking good now.
On these individual options, so keep that in mind. If you collect that $3 credit, that's what you can make.
It's not really gaining at all.
Risk on this one. Takes your break even down to 177, so you're giving yourself a big cushion on this one. But Kevin, I think
we got to break resistance.
Viewers, the key here is if you're doing something directionally in here, maybe using the high probabilities might work out better if you want to be a little less aggressive.
So again, I should have bought the dip.
And some profitability, but at the same time, you just don't know where some of these names are going to go because they're newly traded and they're maybe a little bit more thinly traded also.
Yeah, take
Finlay.
time, July 3rd expiration. So 13 days till expiration. The 180 put $60 below where the stock is trading right now is still trading almost $7. That tells you all you need to know about the perceived possible moves on this name. And so the expected move during that period, $68. So incredible premiums in these options, but as you know, higher levels of premium means higher levels of theta, Tom. And so as long as you understand your risk defined.
Oh, I understand.
You're collecting a fair amount of premium, but it's not void of risk. The probability of out of the money, 76%, Tom, but it's not 100, as you know.
Yeah, I think that's a good point because of the fact that it can move that much. The option market's pricing in these plus or minus $68 moves over the next 13 days. So this does have the ability to move. I think that was one of the things I was trying to hammer on. Make sure you're risk defined if you're trading any of these names. This is just an example trade here on Circle. So good look at the short. Put vertical if you're neutral or bullish on this one. All right, that's going to wrap up Fast Market today right here on the Schwab Network. But stick around. Next Gen Investing's coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free.
It's a couple of acres that's been mowed. It's only been a couple of years. How much money should I bring? Less than 3 hours work.
Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live.
God, dropped on me again. So here's my second chance to add. Odd dinger at 225.
Learning today.
What happened here? It didn't depreciate that much. Oh, well, I missed it. This was our third time down after the breakout. Anybody else in the SPXs with me? AAOI. We're at the 200 here on SPX. We're at 260. Oh, dang. So you got a triple top coming up. This is one I used to trade years ago. Oh, we broke the 200, so the 2154 is your support for right now. We got a double top at 2371 on AAOI. Fuck. SPX just dropped. Okay, we're back down at support again off the 50. I'm going to add right here. $160. We're at my support line on the 5 minute and the 1 minute and the 2 minute and the 30 minute is a Harmony with a tweezer bottom. So we'll add $150. $1.45. So I got 3 of them now. You're at a hard resistance. How long has that been off? My voice, was it been off all day? Somehow it just got red on me here. What'd I hit?
That percent for Olive Garden. They had that return of that buy one, take one deal, so that helped.
It's not been, I've been on voice, haven't I? This today? I was wondering what the heck. It's all of a sudden got red. So I added on here. 230, I had one. I sold them earlier at 270, 280. And I kept one, and now I've got, let me see, 6 of them. Added 5. Jimmy's green. Let's go. 165. Go, baby. I got 6 of them here with an average of 159. We got to break the 200 for it to be bullish. Oh, God, 240. Whoa. Hey. Sold 5 at 240. Back down again. We're back down at 85 cents. Let's get together. So I can pay my rent. It's about time for Bad News Bob to show up. I'm about ready to get back in. Sold 5 at $2.40 on the breakout. A little bit out of the money, but what the hell? Oh, my friends, 1.59 and 85 cents. Okay. 59.65.76. You better hold right here. Come on, you son of a gun. So if I add any more, it'd be 6. Now give me 12. We're at a double bottom right now. So it's got to hold here. Double bottom at 60.12.25. $0.55. Okay. Won't change my mind. Make it 50. Okay. It's now 12:31. I got 74 cents. Come on, baby. $59.70, $59.80s don't look too bad. We've got two hammers down here after three crows. $59.75, so I'm gonna grab one of them along with this. Right about now. $59.75s. $3.30. So I'm in two of them now. Oh God, what happened there? Well, heck. I was up there for a second. We're below the low. I was going to buy it at the double bottom, but I bought it down here instead. Now I'm fuck. $275. So now I've got 6 of these. 2 at 330 and 4 at 275. There's $3. Come on, run, baby. Break that 9. I got 6 contracts at 294. It's holding on one ain't working too well today, so I'm going to sell them all when I get. Like gets us up to $4. We're at 320 right now. 330, 350. There's 3 white soldiers. 380, yeah! Now we got 3 white soldiers, so that's scalping material. That's the 21. Yeah, there we go. I'm all out now. You could go higher. Mister, I didn't even look at it today. Circles pulled back to the 200. I missed that. I would have jumped in that one. Oh shit, yeah, Mister. This is the guy that's going to do my brush hogging on my property tomorrow. Looks like he got him a $2,000 tractor, $3,000 tractor with a brand new We'll see how that thing does. So I'll have before and after pictures. I think we ought to have a poll and see how long his marriage will last. How long is your marriage going to last, Rob? Out of everybody I went to school with, only one lasted. Okay. They're now at $2.60 again. Now we got a Head and Shoulders right here. So let's see. $2.50. We've got 4 contracts at $2.50. Head and Shoulders. I'm making a killing just scalping these. They are now at $3, $50, $50 scalp. I'm still in them. This is your neckline. So I want you to understand what a neckline is. And that's going to be your resistance. So you take and run that to that. And that's going to run right up under the 63 on the 1 minute. So that's your neckline. Or it can come back and do the right, well, we kind of had a little pullback right there. But I went off on this, so I could have went off on that one, but I went off on that one. May a circle be unbroken. Bad News Bob. Well, Bad News Bob rode into town with a beat-up truck and a permanent frown. His boots were worn, his hat was frayed, trouble followed every move he made. He'd walk into the bar and the jukebox wouldn't played. Bad News Bob, he's a storm in blue jeans, breaking hearts and shattered dreams. From a busted tire to a love gone wrong, he's the reason they write them sad country songs. Oh, Bad News Bob, wherever he roam, you'll leave a trail of tears and a broken home. Bad News Bob. Jimmy got into this here call at 59.77 at $2.50. If he had any sense at all, he would sell it at $3. But I think I'm going to let this be because I see a neckline with its throat so long. Let's take this up to resistance. That's why I write this country song. We now are at 310, and that's not no sin. Once I hit 350, I will count my gin. Okay, come on, baby. We're now at $3.20. You can make a business decision. 4 times 3 times $70. But I want 350. Here we go. Now you're at the 1, 2, 3, but you're at the neckline. So you got your resistance at the neckline with a 1, 2, 3B. And you're running up to the 50 and the 63. Would you sell it here at 320? Yes or no? Yes or no? Iran's ready for diplomacy. You know what I think about that? First bomb their bunker, then then. But Russia said, stop it. Stop it now. $330, baby. Give me $350. We're at $330. We're at a hard resistance. Trump, baby. There it is. $3.50. Congratulations, Washboard. You made Trader of the Year. Whoops. So this is an inverse head and shoulders. This is a neckline. This is the 50 SMA and the 63 on the 1 minute. So we took it here, right on this bottom support. Oh. May circle being broken. Neckline. Neckline. INVERSC. Head and shoulders. Bible verse. I need a Bible verse. $3.70. We're just getting ready to start, man. What's going to happen to the market if America doesn't get involved? Because I don't think we will. I said it Wednesday, I said it Tuesday, and I'll say it again on a Friday. Triple Witch Day. Everything is beautiful. Did you buy that dip on Tesla? Rob? Did Rob, you answer my question? How long is your marriage going to last you? Till death do us apart? We are now at 360. Yeah, I gave you a blessing. It'll last forever. I've been to church for 22 weeks in a row. Did you know that, Rob? Come on, baby, break out. Tesla looks like it wants to do it. The next resistance on SPX is going to be the 200 SMA on the 1 minute. And we got a lot of hurdles. It's one of them days where we got to break a lot of hurdles to get there. And we broke most of them right now. We broke the neckline. So now that should become support. I got 4 contracts. And they're up $110 a piece. 120. 100, 110. Let's get some good news. Iran wants to negotiate. I think Iran could be a cool place to take a vacation. especially right now. $3.80. They're at $3.80. Randy, did you get my last message? Are you even here? Randy? I do too. La, 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 la. La, 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 la. Damn, you're rich. Richard, did you take those calls anyway when you asked? We're now at $3.80. But are you up? Oh, shit. They're at $4 now. I'm up $150 a contract. I think we can go higher, but dang, man. Let me know when you get out, Richard. So I like $4. Yippee-yi. Ooh. God, 450, we're at the 200. $520, $550 is a beautiful number, something that I can love. $580. I'm out, Richard. I got one left. There's 830. So I'm all out. That is a marvelous trade. Okay. Oh, I darn 140 cc's. Dun, 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 dun. Okay, well, we're back down to support. If we stay here, I'm going to go for it. I'm going to go to the 59.80s, drop one notch. 59.80s at $3.70. Well, off the 200. Off. So it's got one at 370. I really want to hold this support right here. And $3.20 off the 200 SMA. And I've got 5 now. Right now we're at $4. $4.40. $4.60. Now we're at triple top. And back to 410. We got just a little bit below the 200 right here. See how bad this wants to hold up. That was kind of a flesh out double bottom there to the right shoulder. No, not a right shoulder, just a regular double bottom. I need to put on my slippers. Earthquake in Iran. I bet you they're testing it. I don't trust them. I don't trust Iran one bit. Okay, we got some drama here. Back at $2. Now they're $2.45. Tesla had a little pullback there and rebounded back up above the 200. It's one got, oh man, time's going by today. It's 1:47. Now that I said that, the rest of the day is going to be slow. Always clean? Huh. Well, well. Kroger pulled back to the 200 and squeezing on it right now. Circle sounds like they can really like this one here. I'm gonna go put on my slippers. I'll be right back. Time for some prune juice. And 6 more minutes to power hour, so I'm thinking about loading up again here. Definitely lost support. Oh, I forgot to put my slippers on. Okay, get ready. Back to the shoulder line. Okay, right now, the 5970s. $275. Two of them at $275. I can't believe how delicious grape prune juice is. It's really tasty. Too bad it has real bad effects. Blackout. Was it you, Richard? Come on, baby. I'm 225 right now. I had 230. Now I got 4. What? That sucks. There's a lot of volatility in this thing. It went from 205 to 230 with the flip of an eye, blink of an eye. Always clean.
Hi, this is Joe with Senior Care Services. How are you doing today?
Oh, this should be Chad.
I'm reaching out because our records shows you might be eligible for special state-regulated offers.
No.
May I confirm how old are you?
It's really none of your damn business how old I am. You understand? You know who you're talking to? You're talking to a badass. Because I'm going to fight Jake Paul. They're at $3. I want to fight Jake Paul. Let's go, Rob. $3. Could scalp them right here. It's post 2 minutes past power hour. We couldn't break the 9. Let's go, baby. 280. I'm still in these things. I didn't sell them. I wish I could. I kind of wish I did, though. Ripper. Okay, we're down for the third time down here on Tesla coming to support. Now it's 209. Question is, are we going to get an end of the day breakout? We'll find out. 1.85. $59.70s, 219. Let's go. Break it. There we go. If we can break the 21 or get out, we're at the resistance again. It's 240. Oh, for a second. Dadgum. Volatility, I mean, these price action, it's a little nervousing. Hmm. That kind of sucks.
Hey, chart master Jimbo.
Yeah.
Read that chart I just posted. Tell me if you agree.
Okay.
I think I see something, but
Well, that opening
I'll
price
I'll wait for you to confirm it.
for the buy support, that bottom dot.
Mm-hmm. Got
Yeah.
I see a head and shoulders on the 5-minute for the entire freaking pre-market through today.
Yeah. Head and shoulders. It's a little bit, that next notch up's a better picture of it on the pre-market one, and then the pullback. I'll show you here.
Mm-hmm.
And then you got the inverse head and shoulders down at the bottom right now on the day.
Yeah.
Yep. Definitely could go back to that opening price right there. Even not the, what time frame is this?
That's the 5-minute. That was that gap up last night after hours.
Yeah. Could stop a little bit higher at the body of that there first candle. Oh, that ain't the one. Never mind. Let me take it back. I got it 219. I need to break this trend line right here.
Mm-hmm.
And that's a, let me see what I had that at. That was a head and shoulders right there. I'm going to show that to you here. You got to break that shoulder line on that first inverse head and shoulders we had today during open hours. And it actually created a new one. So if I break that resistance line, which was support, $39 more minutes. Dadgum. We definitely hit that low.
Yeah. Algos really ain't as sneaky as they think they are if you look at the big picture.
Mm-mm. And actually, I'm going to show you something else too. On your 5-minute. That brings us to right about 59.48. Was that slash ES you were looking at? Oh,
Yeah.
fuck, Jimmy. Let me show you something here on the SPX, just for today. On the 5 minute. So that could go all the way down and hit a new low on that.
Yeah. Yeah, I see that trend line you're talking about.
And that's true on the SP, on your slash ES, same thing.
Yeah, that trend line on my ES actually, by the end of the day, if the very last candle of the day touched the bottom of my support zone, it would be dead at that trend line.
There you go. That's a double confirmation then. And that's a fallen wedge.
If that were to play out, that's exactly where the last candle of the day would touch. But unlike the other two touches of the trend line, we're getting consolidation here. We need to get consolidation on those two touches.
Takes a lot more patience when you play within bigger time frames.
Yeah, but it's also a hell of a lot less stressful when you do get in the trade. I don't sit there and watch those 1 minute candles just friggin' going red to green to red to green to red to green to red, 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 red. Like, it doesn't freak me out as much. And that's just part of being new to it.
Yeah.
There's nothing I'm gonna be able to do to get over that part of it except for to be in 2,000 trades.
Had someone talk to me about a 3-hour time frame today. I never even looked at a 3-hour. I said 3-hour intervals. I don't know what he was.
I've been watching the 5 to 30 and the 1 hour all day, and I've got alarms set and pause for every 30 minutes so I can watch the new candle. It's worked out pretty good today.
I said 3-hour. There's no 3-hour. No, we just lost support, so I can get down there. One big fat candle down there, and I'm jumping. I'm gonna go in big time. Big. Be adding 16.
Yeah, that level that it just hit was a level that I actually had marked out because there was a candle last night at 8 o'clock p.m. that touched that, and that's where it bounced. So I did have that as support.
Come on, baby, break. Kind of got a wide mouth fallen wedge with a two-headed snake. 3:33. If I'd never looked at that clock, ever since then, I feel like time took a lot longer. Minikin have 30 acres. Right between three big fishing lakes. Plum de Terre, Stockton, and Truman. I think when I retire, I'll get me a bass boat. I'm gonna go take some pictures of it tomorrow. Or they're going to cut. Well, it's taking too damn long. Here we are. I'm starting to 2:37. There we go, finally. We gotta break 59, 62, 67. Shoot. Iran wants to speak to U.S., not Europe. According to Trump.
Be able to
Well, we're extending. What a heck of a squeeze here.
Oh, absolutely, studio. They freaking pinned it in a $4 range for over 45 minutes. They know exactly what they're doing. Hey Rob, since you're the resident expert in end of day profit, when is it too late without an option? Like when is the decay just too much to get over? Like 5 minutes out, 10 minutes out?
I always said 10, but that's just guessing.
I've watched them at 5 minutes out just freaking die.
Blah.
I don't have paper trade enough, but I promise God I would paper trade a 59, 55 foot just to see what happens and see if I'm right. Right there. So 125. I'm going to look at it again at the end of the day. You just have to 1 minute 63. There's volatility.
And it's right at 10-2.
Things are about to get wild as hell. The splits went from 125 to 195 right before it happened.
SPY bounced off my major support line today and held it. The one I had in blue, we dipped on down to the support right below it, but come on, spike. Less than 9 minutes. $0.45, 59.70s. Dang, I think I was chicken out on the tray. Okay.
Yeah, that volume.
$45.65. Give me a buck. 7 more minutes. I got a ready, set, go, go, go. I'm not saying that's going to work, but that's what it says.
Bam.
There we go. Oh, no. Wouldn't let me sell it. Shit. That could be all that's all it said right there.
Damn.
Oh boy, look at there. Woo, I'm out. I'm out.
Look at that volume.
Fuck yeah, 45. I just made 200% on that trade. I got lucky. I was down quite a bit too. Hit the 200 EMA on the 1 minute, 2 minute. My trading days are done today. I am finished. Yes, too, Czar Trader.
See you on Monday.
Did you get into that last one?
Yeah, I took one.
Very good.
I got my ass kicked trying these end of days all week long, so I went super late.
Yep. Well, it's been a good week.
So once you sign up for that bot, let me know, and I'll put some instructions together on how to get it posted in here.
What bot do I need to sign up for?
RSS.app. I'll give you the link in the private message.
Okay, I'll look at it later then.
Yeah. Then basically all you do is sign up, and then you pick which feed you want, and then
Yeah.
you just point it to a Discord room.
Well,
Easy.
my life's going to probably change here close to the end of the year, so I'm not sure what I'm going to be doing yet.
Oh, okay.
But
Yeah, I don't think I can get, because when you sign up for it, you
Yeah.
have to authorize it through your Discord. So I authorized it through my Discord, which I think makes it know that you're the Discord owner.
yeah,
So I don't think I can put it here because I'm not the owner here.
yeah, we'll talk about it later.
Alright.
So at the end of the day, Funk asked a very important question about when's it time to just kind of give up at the end of the day, not make that last trade. Well, mine's always been a 10-minute cutoff. Then today, I held on, and it was 10 minutes exactly when it started to move. So it gets pretty close to the bell. And that's the way it's been here in the last couple months. We've been having real good sell-offs. Middle of the day, three quarters of the day, and we just kind of, the buyers leave and the sellers start to come in. There's been a couple exceptions, but I've noticed that I'm slacking off a little. I've been caught here in the last 3 or 4 weeks in some trades, middle of the day, later on after lunch. And I'm going to try to slow my trading down, get at that time, and just wait for the perfect setups. Because I can snap them in and out here lately. It'll change. It'll always not be that persistent, but so I like getting in them beach trades in the morning. They're almost always a winner. But then later in the day, it just gets a little bit more tougher for my strategy. Because usually we're pulling back, and we've been hitting the day lows, pre-market low. So today was a pivot point that I had on the SPY that we hit, and we did go below it too. But I did have that pivot point on the hour. I'll show you what I'm talking about. This blue line right here. See where we've had that pullback right there? About a week ago. And that's where I put that blue line. And that's where we held here, pre-market, or after hours, pre-market, and then again today. So we came back, and touched that body of that candle right there. Then I put another trend, got a couple more trend lines on here just in case we didn't hold that bottom there, but that would have been the place. Right into close, jump in that trade, or even a little bit earlier. These are on the 1 hour candle. But 1, 2, 3, triple bottom bounce. Triple bottom, quad bottom bounce. And then it came back and retested twice in the last 2 hours. That 593.69 area. So I had that marked. That's about what's going to be my lowest support. And we did pull back and hit it pre-market. And we had a nice little bounce with 3 white soldiers up to the 200. And then it came back down the rest of the day. So yeah, a little more patient between the hours of 1:30, 1 o'clock to 3. Well, my time would be 2 o'clock to 3 Eastern time. Mine would be 1 to 2, which would be an hour before, that'd be 2 power hour. And then power hour pulls back. So Rob says he might be back with us next week. And Funky's probably still doing with his family. And I'm going to get out of here and see if there's any sun outside and go sit by the pool. If not, I'm just going to take a break and relax. I don't really want to eat much. Try to lose 5 pounds here in the next month. I've been eating a lot of salads here lately, if you haven't noticed. Salads with some meat. And I got a lot of crap in today's salad. Had egg, and it had beets, and it had cucumber, had radish, had carrots, had feta cheese, and chicken with romaine lettuce. So they get pretty tasty with all that stuff in there. You know, it's filling. So I think that's it. Yeah, if Iran's getting desperate testing its nukes right now, you know, you don't ever want to get desperate and work too fast. The last 21 years, I've had just one time limit, and I've got to be done, you know, this one section cleaning by 8:30, but I've always got to look at every night, you know. If I'm coming in at 1, I got to make sure I get this job done so I can go to the other one, get it done, and go to the other one and get it done. And now that the Trump ordered the government employees back to work, they're all pissy and grumpy, and I got to deal with them. They thought this was going to be a lifetime thing, which it probably could have been, working from home, the IRS. But I don't trust them at all working from home. You could tell just by listening to them that they had more play than what they, you know. Now they have to work 8 hours a day. But I could tell working from home, you could get away with a lot of stuff. And especially if you're a government employee. It's not working. It'd be a lot different than working from home from a company, probably. But they had it made for 5 years. Work 3 or 4 hours a day and get paid 8. At least that's the way I think it is, but I might be wrong. Everybody have a good day today. Anybody come out red today? Okay, well, I'm going to get on out of here. That /ES. Yep, sure did. 2 minute hit the 200. And the 3 minute did. 5 minute also hit the 200. We'll catch you later, YouTubers.